Parece que está en vivo. Buenos días a todos. Estamos aquí en la sesión de Bolsa. Estoy, uff, este, creo que no debí de hacer eso en vivo. Están subiendo todos los activos que he estado viendo en la mañana. Es una locura. Los mercados están mixtos ahorita. El S&P 500, Nasdaq y Russell al alza, pero pues 0,5%, o sea, nada. Eh, esperen. Listo. ¿Qué más? Al alza, el Dow Jones a la baja, ¿qué más tenemos? Tengo que poner las noticias, no las, o sea, he estado tan ocupado viendo todo lo que se está moviendo en bolsa que necesito, tengo que estar atento. O sea, ya son las 10:30 de la mañana,
SMCX.
ya son las 10:30 de la mañana y desde las 7:30 estoy aquí pues viendo todo lo que está pasando en la bolsa, ¿no? La compra, la venta de los activos, la gestión, todo eso, ¿no? Ya puse un disclosure, creo que sí debí de ponerlo, o sea, me dijeron mis asesores de marketing y abogados y hasta un contador me dijo que a lo mejor lo contrato por eso. Me dijo que tenía que tener con ese cuidado con ese disclosure que siempre tenía que estar presente porque pues no estoy recomendando inversiones, a menos que se firme un contrato de confidencialidad de servicios financieros en el cual yo cobro comisiones del 30% de las ganancias cada 1, 2 o 3 meses. Pero bueno, mientras estamos aquí, ahorita les voy a contar la rentabilidad de esto porque esto va para el TikTok del día de hoy. Mientras tanto voy a poner esto porque tengo mucho trabajo, tengo que registrar muchas órdenes de compra y de venta, tengo que gestionar el riesgo pequeño, mediano y grande que están asumiendo las carteras en este momento de mis clientes actuales. Entonces tengo que hacer eso, ¿va? Así que mientras voy a dejar esto.
And things like deals from Prime Days or Circle Week or whatever it may be present
Amazon
opportunities
Prime Day.
for
Ok,
those
eso es
who
en julio,
are on
¿no?
a tighter budget to accumulate
Desde
items.
el
I
15
will
de
say
julio, creo.
though, we're getting to the point where it seems like these events are happening quarterly, monthly, to some extent. Now I know not maybe to this extent, but the more frequently you have sales, the more likely you are to train behavior for consumers to wait for them. So
Miren, mientras estos güeyes están hablando del Prime Day de Amazon, que creo que comienza el 15 de julio, Trump está hablando de que van a aumentar, van a empujar los contratos de defensa para aumentar la producción. Tal vez el sector militar bélico, yo le digo militar bélico, pero es militar, sector de defensa y todo eso, armamento militar, van a estar ahí al alza tal vez, ahorita lo checamos. Mientras déjenlo
And
pongo.
they're very good. They're very good, but they should be paying for their own military.
President Trump, could I ask you a question about Jerome Powell as well, and then the question to the
The
Attorney
question
General.
about what?
Jerome Powell, and then I have a question for the Attorney General. Jerome Powell, who you've been pressuring to lower interest rates, he's facing accusations of lying to Congress, which is a potential crime about the
Well, then he
opulent.
should resign immediately. We should get somebody in there that's going to lower interest rates.
Do you want congressional
Why don't you
Republicans to
call
look
for his
into-
resignation?
Do you want congressional Republicans to investigate and
It's
pursue?
okay
and
with
punish-
me. I think he's terrible. I think, look, we're paying, I call him too late. TOO, too late, like Too Tall Jones for the Dallas Cowboys, right? Too late. He's always late. But he wasn't late with Biden before the election. He was cutting him like crazy. It didn't help too much, did it? But he was cutting him like crazy before the election with Kamala and Biden. He was trying to get them in, I guess. I don't know. He was recommended by somebody that worked for me. I like you better.
If I could ask the Attorney General a question too, President.
Sure.
Your memo and release yesterday on Jeffrey Epstein, it left some lingering mysteries. One of the biggest ones is whether he ever worked for a American or foreign intelligence agency. The former Labor Secretary, who was Miami U.S. Attorney Alex Acosta, he allegedly said that he did work for an intelligence agency. So could you
Necesito
resolve
café.
whether or not he did, and also could you say why there was a minute missing from the jailhouse?
¿Es Ivanka?
tape on the night of Saturday?
Yeah,
Ah,
sure.
no.
If
Hey,
I
Pam,
could,
could I just interrupt for
Sure.
1 second? Are you still talking about Jeffrey Epstein? This guy's been talked about for years. You're asking, we have Texas, we have this, we have all of the things. And are people still talking about this guy, this creep? That is unbelievable. Do you want to waste the time, and do you feel like answering?
I don't mind answering.
I mean, I can't believe you're asking a question on Epstein at a time like this where we're having some of the greatest success and also tragedy with what happened in Texas. It just seems like a desecration, but you go ahead.
Sure. First,
Es
to
una
back up on
locura.
that, in February,
Qué manera
I
de
did an
evadir
interview
una
on Fox,
pregunta.
and it's
No
been getting a lot of
manches.
attention because I
Tome nota.
asked a question about the client list, and my response was, it's sitting on my desk to be reviewed, meaning the file along with the JFK, MLK files as well. That's what I meant by that. Also, to the tens of thousands of video, they turned out to be child porn downloaded by that disgusting Jeffrey Epstein. Child porn is what they were. Never going to be released, never going to see the light of day. To him being an agent, I have no knowledge about that. We can get back to you on that. And the minute missing from the video, we released the video showing definitively the video was not conclusive, but the evidence prior to it was showing he committed suicide. And what was on that, there was a minute that was off the counter. And what we learned from Bureau of Prisons was every night, they redo that video. It's old, from like 1999. So every night the video is reset.
Cerrando
and every
posición
night
ya.
should have the same minute missing. So we're looking for that video to release that as well, showing that a minute is missing every night. And that's it on Epstein.
Mr. President, on the tariffs again, on August 1st, you said is the deadline. What incentives do countries have to negotiate? It seems that deadline keeps moving. It was April 2nd, now it's...
We didn't move, no. It's always been August 1st, that's when we're paying. A statement was put out today, and I put it out just to make it clear. It wasn't a change, it was August 1st. We don't change very much. You know, every time we put out a statement, they say he made a change. I didn't make a change. Clarification, maybe. No, August 1st they pay. And everybody pays, everybody has to pay, and the incentive is that they have the right to deal in the United States. If they don't want to, they don't have to pay, and they don't have to deal here. But if they want to buy and make a lot of money and sell in the United States, they have to do that. You know, if you go back and look at some of the good presidents, our country was the wealthiest, proportionately the wealthiest, from 1870 to 1913. It was an all-tariff country. We didn't have income tax. That came in in 1913. We had tariffs, and we had so much money we didn't know what to do with it. We had, we had a couple of presidents that were very, very strong. McKinley, I guess, more than anybody, but he was the tariff king. But he was very, very strong. As sort of said, he made a fortune for this country, became very rich, and then Teddy Roosevelt went out and vice president, and he spent the money. And they said Roosevelt was a great president. And let's say he was a great president, but the money was paid by McKinley with tariffs. Tariffs are charged by other countries at levels that are ridiculous. And you know, I call those other countries, and every one of them is willing to give us everything now, by the way, just so you know. Sir, we'll charge you no tariffs, nothing. We'll give you everything. We'll give you access to our markets. We'll give you everything. Is that a correct statement, Scott?
Yes, sir.
Howard, would you say that's a correct statement?
Exactly correct.
It's like, they just don't, because they're very spoiled, because for years they ripped us off and we didn't have a president that understood it, or Secretary of Treasury or Secretary of a lot of different secretaries are involved, but certainly Commerce Secretary was, you know, not doing their job. I don't know about Kelly, she's small business. We'll keep it that way, okay? Her small business is bigger than almost all big businesses when you add it all up. But no, they are very respectful of our country. But the incentive is that they have the right to do business with us. Without that, they don't have the right to do business. And that would be okay, too.
And will there be a flurry of deals? Will we hear in the next 24 hours, will we hear a flurry of deals?
Yeah, we have a lot of them going out. But the deals are mostly my deal to them. We're picking a number that's low. We don't want to hurt them. And fair. We're picking a number that's lower than, in most cases, lower than what they charged us. But it's amazing when you've paid all this money for years and they get one president that's a little bit different and a little tougher on this subject, and they're willing to drop everything they've been charging us for years and years. I mean, we have countries going, We will have you don't have to pay any tariff to come in and do business. They're
Qué
giving us
delicia.
total access to their countries. They gave us no access to the country. They say, well, you cannot go into okay, good. Now we will give you total access and you don't have to pay any tariffs. But please don't charge us tariffs. And we don't like that deal. So the letters I send out we have made some deals. We can make a lot more deals. It's just too time consuming. It just makes it more complicated. And we can do things over the years too.
Ahorita que está el comercial voy a
we're
hacer el
not
cambio
hard
porque
line.
quiero usar gorra.
But it's
No me
about
peiné.
time the United States of America started collecting money from countries that were ripping us off and laughing behind our back at how stupid we were. Okay? Thank you.
Mr. President,
Yellow.
on the tariff issue, so you've talked about India coming, but then a couple days ago you issued a new tariff threat to members of the BRICS countries for
Yeah.
if they aligned with anti-American policies.
10% charge.
That would be India, Brazil,
That's
Russia,
right, they have to pay
South Africa.
10% if they're in BRICS. Because
Right.
BRICS was set up to hurt us. BRICS was set up to degenerate our dollar and take our dollar as the standard, take it off as the standard. And that's okay if they want to play that game, but I can play that game too. So anybody that's in BRICS is getting a 10% charge.
Is that a need?
A ver, el expreso americano.
Yeah, pretty soon.
If they engage in some behavior.
Well, if they're a member of BRICS, they're going to have to pay 10% tariff, just for that one thing, and they won't be a member long. I thought BRICS was, I said this about a year ago, and it largely broke up. But, there are a couple that hang around, but I thought it largely broke up. BRICS is not, in my opinion, not a serious threat. But what they're trying to do is destroy the dollar so that another country can take over and be the standard. And we're not going to lose the standard at any time. If you have a smart president, you will never lose the standard. If you have a stupid president like the last one, you would lose the standard. You wouldn't have the dollar as you. And if we lost the world standard dollar, that would be like losing a war.
Yo creo que ya quedó
a major
bien.
world war.
Ya quedó
We would
negro.
not be the same country.
Bueno, iba a decir
any
algo,
longer.
pero me iba a
We're
andar
not going to
muriendo,
let that
entonces mejor.
happen. The dollar, you ever hear the
Ah,
expression?
ya me quiero poner mi
dollar is
gorra.
king? The dollar is king. We're going to keep it that way, okay?
66%.
Challenge it. They can, but they're going to have to pay a big price. And I don't think any of them are willing to pay
Se
that
cerró
price.
ahorita. Ya es hora de cerrar esta también.
Thank you,
Cerrar.
Mr. President. Are you optimistic about reaching the tariff deal with the European Union soon?
Well, the European Union has been speaking to us, Ursula, and the whole group, and they've been very nice. They treated us very badly until recently. Now they're treating us very nicely. It's like a different world, actually. They've treated us very badly. They were among the toughest to deal with. Actually, in many respects, they were much worse than China. Look at what they do to our companies. They sue Apple. They sue Google. Very badly until recently. Now they got from Apple on a lawsuit that they didn't have a case. They have, judges that are European Union judges. And they take so much money away from our country in terms of that, in terms of other things that they do. They're very tough. But now they're being very nice to us, and we'll see what happens. We're probably 2 days off from sending them a letter. We are talking to them. I just want you to know, a letter means a deal. A lot of people say, we got 200 countries. We can't meet with 200 countries. We have a few trusted people that know what they're doing, that are doing a good job, but you can't do it. You have to do it in a more general way, but it's a very good way. It's a better way. It's a more powerful way. And we sent them a letter. You read the letter. I think it was well crafted. And mostly it's just a little number in there. You'll pay 25%, 35%. We have some at 60, 70. Those are ones with massive, where we have massive trade deficits because they've treated us very badly. But I would say in every case, I'm treating them better than they treated us over the years. Don't you agree with it?
I do.
I could have done much. I could have been much harsher. I don't want to do that. We want to have relationships, but in every case, they treated us far worse than I'm treating them. I'm treating them very good. I could go higher with the tariffs, but I don't want to hurt them. That's why when you just read it, you come up with the number. It's so incredible that prices are actually going down. Just so you know, when I got in, everyone said, "Oh, eggs are going through the roof." That was I was in for about 4 days, and they started screaming at me about eggs. They said, "That's Biden's problem." I didn't know about eggs. but eggs went up about 5 times. You did a fantastic job. And we ended up shortly getting, in fact, for Easter, they said, go out and buy plastic eggs. You can't use real eggs. Well, we bought 200,000 eggs for the White House for the Easter egg hunt that we have at the White House, and there were eggs. We had the price down, and now the price is lower than it was before. We did a good job with eggs, but we did a good job with groceries. Our prices are down in this country. A big part of it's oil. The oil, you had a couple of places last week, you had $1.99 for oil, for gasoline. Nobody thought they'd see that. I want to get it lower if I can, but we've done a good job. You've done a very good job. Do you want to say a couple of words about that, you and Chris, about what's happening with energy?
Well, absolutely, but I would say on the pricing side, President Trump, the fact that you've endorsed and supported a policy of energy dominance, that sends a signal to the market that we're going to have more supply. You talked during the campaign about inflation being a country buster. You've broken the back of inflation in 6 months, among all the other things you've accomplished.
We have no inflation.
And we've got, and then heading into the 4th of July, these were the lowest gas prices at the pump in 4 years. And again, for Americans, this is like hundreds of billions of dollars that stay in their pockets because we lower the price of gas at the pump. And when we lower the price of energy, it lowers the price of food. It lowers the price of the clothes you wear.
It's the biggest thing.
It's the biggest thing.
It's like a big tax cut. When you get energy down, every 50 cents is like a massive tax cut, and we've gotten it down much below that. You know, we had great energy, great low prices, everything else. When the election turned over, I'm trying to be nice about it. It turned over, shockingly, but nevertheless it happened. Energy started going up, and it went up really bad, and then he went back to the Trump policy. The problem was they didn't know how to do that, and he lost it. He lost that sucker. That big sucker was out of control, and his energy prices went way up, and that's what caused it. But it was also stupid spending. They spent money like, they used to use the term drunken sailors, but I won't use that term. Although it is very descriptive, I won't use that term. I refuse to use it. But they spent money at levels that nobody had ever seen before, and trillions and trillions of dollars wasted on the Green New Scam, greatest scam in the history of our country, other than maybe Russia, that might have been. But the Green New Scam was the single greatest scam in the history of our country, and continues to be, but it's weakened badly. It's hobbling along because people are they're finally getting it. But they spent trillions of dollars on the Green New Scam, getting nothing for it. Devised by a couple of young people that weren't even good college students, you know? Not even good students. Check out their marks. Yeah?
Can you explain something else, Mr. President, on what you said last night?
Not for CNN.
You said you would send
Not for CNN. Go ahead.
In the last jobs report, Mr. President, in the last jobs report, the manufacturing jobs actually lost 7,000 jobs. When will the investments that you've been talking about have an effect
Well,
on
they're
manufacturing?
building the plants now. About 7 have started. We're going to have hundreds started within a short period of time. Lee Zeldin, who may be the most important man in this room, I'm sorry, but he's the one that gets the permits, whereas he's the one that has to get the permits for the plants and the factories, and permits that used to take 5 years, he's getting in record-setting times. AI, we're leading China a lot in AI, and if we go with this, you know, I'm allowing the plants to build their own electric. I'm allowing them to become an electric utility, so they can produce their own electricity, because we need double to be successful with AI, which is the biggest thing now. We need double the electricity that we have, which is hard to believe. We need even more than that. And they're building plants with their own electricity substations. They don't have to use the grid. And anything they build extra, they're putting into the grid. So we're supplying the grid with brand new electric sources. And you know, it's funny, when they came to see me, they never even asked for that. I told them about it. The reason they didn't, they thought that was an impossibility. You're not allowed to build your own electric. These are massive investments that are being made in building electricity for their plants. And they're going to have, I think, Doug, a lot of electricity left over. And that electricity is going to be passed into the grid and give us no more, you know, like you look at California. They have blackouts and brownouts every week. They're totally out of control. They have a really incompetent governor. Where's Chris? Is he here? Do you want to speak to the subject?
Yeah, I think a huge thing in the One Big Beautiful Bill, Mr. President, because of your leadership, is the ending of these subsidies, as you call them, the Green New Scam. That saves our country $500 billion over the next 10 years. But American taxpayers were paying twice. They were paying that money, $500 billion in the subsidies, and they were paying more expensive electricity price. If you subsidize something, you should at least lower the cost of it. But in this case, we were subsidizing something and paying more for it. So the One Big Beautiful Bill had two huge things: ending wasteful spending. Wind, solar, and batteries combined are 3% of U.S. total primary energy. 3%. For $1 trillion, another $500 billion coming. It's just not a good investment, hurting our businesses, hurting our consumers. And that One Big Beautiful Bill also unshackled oil, gas, and coal development in the United States, onshore and offshore. Secretary Burgum has been working tirelessly on how, by getting the government out of the way, private businesses will develop more resources in the United States, lowering costs for American consumers and making much better leverage for the United States to help our allies abroad and reduce the power of our adversaries abroad. So just a huge win on the energy front all around, and I thank you for your leadership.
We're setting records now on energy, and there'll be nothing compared to what they'll be in about a year from now, but we're setting records. And wind is a very expensive form of energy. It's very bad for your beautiful surroundings, the plains and the valleys, and the birds are dying all over the place. You know, the whole thing is a disaster. They're almost exclusively made in China. Not that I have anything against China, because I don't have a great relationship with President Xi, but I asked him, how many wind farms do you have? He makes them, but they don't have a lot of wind farms, I'll tell you, very, very few. And wind is tremendously expensive and is very ugly. And if you own a house
Y yo y los comerciales para ponerme mi gorrita y cambiar el audio y todo eso.
And interestingly, in New England, you probably read where for 50 years they had 2 whales washed up. 50 years. And last summer, they had 14 washed up. Now, I'm not saying that's the wind farm that was built, but maybe it is, right? Probably is. It's tremendously expensive, and it can only be done with subsidy. You know, I know a man that's in that business, and one of the biggest in the world actually runs a company that builds these stupid windmills. And he said, I hate the business because it's the only energy where you need subsidy. He said, energy shouldn't need subsidy. You should make money with energy. So when
we're going to continue to monitor the Q&A there in the cabinet meeting.
Sí, pues ya es
The
demasiado.
president has made some headlines in, and I'll recap for you. Obviously, at the very top, you heard some questions about Russia, Ukraine, about Jeffrey Epstein and the controversy around that. But specifically on tariffs, he did once again criticize the Fed chair, calling Jay Powell terrible, that he's always late. He was asked about the moving deadlines around tariffs, to which the president says that they don't move. Maybe he clarifies them. That's the word that he used. He said that probably 2 days off from sending a letter to the EU regarding what their tariff rates are going to be. And then you also heard him renew his threats on tariffs against the BRIC countries, Brazil, Russia, India, China, South Africa, and what has now become a host of other nations there. And he, in the context of those comments, did make remarks regarding the dollar, saying that that was set up, the BRICS were, to try and destroy the dollar. President saying we'll never lose the dollar as the world's reserve currency. The dollar is king, and we're going to keep it that way. And we have been watching, obviously, the movement in the dollar since the beginning of the year, which has been stark, and it has been down. It has been one of the worst starts to a year for the strength of the dollar. And there it is, shown very clearly on the screen here in many decades, the dollar index down against many currencies around the world. So we'll follow all of that and, again, monitor what's happening in the cabinet room there and bring any other headlines that you do need to know about. We're going to do this now. You want to go to the moves? Yeah? Yes? Do more of this now? Oh, we're going to take a break. We'll take a break. We'll come back and we'll get to committee moves coming up on the other side.
Today is a new age.
Circle is building the foundation of our new economic system. We can raise global economic prosperity.
Want to win $500?
Yes.
The PXG Driver Challenge is back. Test your driver against PXG Black Ops. If you win a distance and dispersion, you take home $500. Book now at pxg.com. PXG, you've never played like this before.
At Interactive Brokers, independent RIAs work with the best research and trading tools designed to help them outperform the markets. Meet them at Interactive Brokers Investors Marketplace for advisors. Advisors at Interactive Brokers keep all they earn on our low-cost platform with no ticket fees or custody charges, low margin rates, and high interest earned on idle cash. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Never miss a moment.
There will be fewer people doing some of the jobs that the technology starts to automate. But there are going to be other jobs, and we're going to hire more people in AI.
The SEC has been standing athwart efforts to innovate in the marketplace. We've had regulation through enforcement. That day is over.
The arguments toward cutting are going to grow on the FOMC, but I just don't think they're going to be able to get consensus by this July meeting.
I'm Lori. I've been a Dave member for 3 years. Dave definitely helps me catch up on bills with up to $500 in 5 minutes or less. I love that I can go skating. I can take the kids to the movies. Getting started is easy. Just link your bank.
Y justo por eso me van a banear. Ando checando unas acciones ahorita. Ok. A ver, son $1,000. Serían 1,100. 2,000, ok, serían 2,000. Vamos a vender Lixte. Listo. Dejen pongo esto porque sí tengo que hacer varios
beginning of the
movimientos.
year, when some activist investors kind of got involved, said they're buying shares in Uber. There were some headwinds at the end of 2024 when it was staggering a little bit just due to the fact that autonomous vehicles and the concerns around that. They're partnering with Waymo at this point, and, you know, they got their hands in everything. They're trying to make a super app, Kev.
That news event where they announced that they're partnering with Waymo alleviated or made a bunch of fears dissipate about their role, or were they going to get one in autonomous driving. Remember, Elon Musk basically gave them the Heisman when it came to their involvement in the robotaxi or the cybercab. Elon Musk doesn't sound like he's interested, but Waymo and Google Alphabet certainly was. And Tom, what's the end game here for Uber? Are they an acquisition target by one or two of those, Uber or Google Alphabet or Tesla? Are they an acquisition target? Possibly, right? That partnership usually starts with something for Google Alphabet. So I think that's important. When they announced that, all the fears about their involvement in autonomous driving dissipated and the stock went up to new highs, Tom. So I think that's where they sit right now. They're firing on all cylinders, but there was risk. That risk seems to be going away.
Kevin, over the past couple of days, Wells Fargo yesterday raised the price target to 120 from 100, keeps an overweight rating. Today, B of A raised their price target to 115 from 97. And they stated that no tax on tips provision in the big, beautiful bill includes 1099 workers and gig economy workers, Uber and Lyft. And we just talked about that with Andy Swan. This is all about scale, right? And Uber does better when more drivers want to drive for them just like Airbnb does better when more people have places to rent out. Is that going to be a bonus, or is that the bonus moving forward for this company?
Well, you can make a case that's a bonus for a lot of service industry, right? Leisure and hospitality and service workers that get paid by tips. Let's face it, Tom, everywhere you go, if you pay electronically, there's a tip window, right, for you to hit. No matter if you're paying at a counter, if you're using a service, everyone's getting paid or asking to get paid via some type of tip right now. So does that part of the big, beautiful bill help all these workers? I think it does. I'm not a tax expert, but it seems like that's a positive for them as well. And now they're talking today, Tom, about finding ways to get gig workers benefits without joining a union. Now, the union's fighting that. That's another whole topic. If they get them benefits without having to go full-time, without having to join a union, that's another positive for Uber and its drivers. So there's a lot of headlines out. Remember, I'm a big fan of the news flow, and the news flow seems to be really positive for Uber right now.
Yeah, it's reflective in that stock, as I mentioned, hitting all-time highs. The 50-day moving average down to $87. We're at about $97 right now. So far above those levels, the most it's been in over a year at this point as far as a technical basis. So, Kevin, I looked at something pretty straightforward on this one. You look at the IV percentile rank, it's below the 30% level at this point on this rally that we've seen. So in the bottom 1/3 of volatility levels that we've seen over the last 52 weeks. So I looked at a straightforward bullish example here. If you think this thing is going to continue to grind higher and hit more fresh all-time highs. Now, they report earnings that first week of August. The 5th of August is when the data is for earnings at this point. So I looked at buying a call vertical, buying that 95 strike call slightly in the money, selling against that, selling the 101 strike call. So basically a bullish $6 wide call vertical. We've got $2.25 debit on this trade. That's where it was trading earlier. It's trading closer to $2.90 right now because the stock has bounced off of those session lows. It was down over 1% earlier in the session, now flat. But if the debit you pay on this is going to be your risk. So if you pay $2.25, it's going to be $225 in risk. If you pay $2.90, it's going to be $290 in risk. Remember that. That's the most you can lose on that that trade. Now, if you pay $225, it takes your break even to $97.25 to the upside. That's not even that far above the current share price, less than 2%, Kevin. But it's pretty straightforward. I think one of the keys is, Kevin, you're giving yourself 3.5 weeks in this position, and it gives you some flexibility as far as trade management goes because you're buying a directional vertical.
The upgrades coming, I mean, there could be upward momentum in this name as long as the overall market, stays calm. Tom, basically buying a $6 call vertical, spending somewhere between $2.20 and under $3 for it, so you get a chance to minimal double your money up there or possibly more based on where you get this in, what debit you make, Tom. But remember, the risk is the debit paid, and you really have very little Vega risk in the summer. Both options are in the same expiration, so nothing to be worried about there. This is just a directional play in Uber on the upside.
Yeah, and Kevin, I looked at it this way. If you buy the 95 calls, because a lot of people will go, why don't you just buy the call? You're cutting down your potential profitability by selling a call that's above the market. Well, this is a duration, right? You've got a finite amount of time till expiration. If you were to buy the 95 strike calls just outright, it'd cost you over $5. That takes your break even above 100. So by selling something above where you're buying and making it a call vertical as opposed to a straight call, it lowers that break even. If you offset some of those costs by selling the 101 strike, that's trading over $2.10 at this point, with the expectations that, hey, yeah, it can go higher, but on a percentage basis or probability that's going to touch above 101 is a lot less than maybe just buying the call outright and waiting for the stock to even move higher to get above a break even when you're just buying a straight call. All right, good look at the directional bullish example there. That's going to wrap it up for us today here on Fast Market. But stick around right here in the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available
70%.
anytime, anywhere.
Creo que ya está conectado, listo, se escucha. Ahora sí se escucha, perfecto.
Welcome to Next Gen Investing. I'm Jenny Horn, joined by my co-host, as always, Alex Coffey, and here to break down markets for the next hour here as we hit the noon hour in Chicagoland. So as we check in, we are seeing markets actually relatively quiet on the session today. We are seeing S&P's trying to edge out a modest gain. Well, the Dow is our laggard, down 0.3%. The Nasdaq up about 0.1%, and the Russell actually out in front at about 0.9% gain. But Alex, as I was just saying, it does feel very much like we are in peak summer trading right now, as it's quiet, we're earnings light, we're even economic data light. Thank goodness, I guess, we have tariff headlines to talk about.
Yeah, and it's interesting. We talked about this a lot. You were talking to me before the show about how July, I think you just said every year since 2015, the market's been green for the entirety of July.
Yes.
But I've been talking about this for about a week and a half now. The first 2 weeks in July, historically, some of the best 2 weeks on a 2-week stretch for the S&P 500 of any year. Simon White from Bloomberg actually put out an article today saying the same thing. It doesn't get much better for stocks over the next 2 weeks, calling week 28 and
the next one, the best 2 weeks going back to 1990. So this first half of July, historically, pretty darn bullish.
Okay, and that's, I think, even more impressive when you think about the outpaced, I mean, just like price activity we see for these first 2 weeks. Even the week of the 4th of July, I was reading on average closes up, specifically in the S&P 500, about 1.3%, which is pretty strong historically. So yeah, some of these.
Just do them. If that happened every week, it'd be 50-some% average return. So obviously there's some down weeks in there too. Now, the one thing that we should preface is, seasonally, those weeks tend to be August, September, October. So it's like you get the good, and then it's like everybody gets back from vacation, and suddenly it's sometimes not so good.
That's true, yeah. So I guess maybe some of those people that are on vacation stay on vacation. We like things right now relatively calm and to the upside, as we've seen price over the course of July thus far. But as always on this show, we will start things off with some movers to keep on your radar today. We will also be discussing Meta as well as Apple, as there is some news that Meta is stealing a top exec from Apple. So we'll be charting and trading both of those names, as well as looking at CoreWeave today for FOMO. Big move yesterday following that acquisition of Core Scientific, but today catching a few downgrades as the street right now has some pause about its valuation as we approach this now deal. We'll also be discussing the tech outlook from Danielle Rubino. So a great conversation there, as tech has been hugely in focus in terms of this market recovery. And we will close things out with Sunrun. Unfortunately, solar stocks looking for some sunnier days ahead, hopefully, as we did see Trump slash the green tax breaks. So not to be expected, or not unexpected, I should say, to see that weakness in solar, but continuously just taking it on the chin. A great example of how things can always move lower.
Yeah, and well, it kind of goes to show if a business is set up with needing kind of kickbacks to make the business work. Not saying that that's the case for Sunrun or its peers, but you see the tremendous impact of the stock price from subtle changes to the tax codes. Maybe there's an issue with the business model. The same thing that we've said about other, firms that, are running on, no profitability and constantly issuing stock to stay alive. So this is when fundamentals matter. And so you got to pay attention to some of those things. We'll get more on that with Jeff Pierce later on. Let's get to some of our movers of the day, though. D-Dog, Datadog down a little bit today, 4%. This on a Guggenheim downgrade, but it's got a word in there, sell. We aren't getting a lot of those, ratings that much lately right now.
That is exactly what jumped out to me, because I will say this is not as pessimistic maybe as a note as the sell rating would have you think, or maybe I'm trying to frame it optimistically. They did downgrade shares to sell from neutral Guggenheim, that is, with a $105 price target, citing the risk of potential significant optimization by OpenAI, which they believe to be Datadog's largest customer. So they believe that OpenAI's overall observability software roadmap is shifting towards
strong relationship to the year-over-year change in the S&P 500. In addition, we agree with the Fed that inflation probably does breach 3% by year-end at what's called the core personal consumption expenditure deflator, or core PCE. That's what they watch. And, it becomes a lot tougher in a soft stagflationary environment with inflation well above their 2% target and the economy slowing, which affects directly S&P 500 earnings, including big tech. That what happens is they get caught in stagflation. You get an echo of what we saw in the first 4 months of the year. Echo being half as bad, about 12% instead of intraday high to low, a little over 20%, but still an echo of what we just saw on the stagflationary trades.
Yeah, so in other words, and I think that's a good way to put it, we got kind of a preview in April of the panic that would ensue if we actually had higher inflation and a slower economy. And you think we end up with a little bit of that in the back half, notwithstanding the better jobs report lately, some of the more encouraging data. And those who say that inflation has been surprisingly kind of quiescent throughout all of this.
Well, inflation, of course, faced some easy anniversaries, so the base effects on the year-over-year basis. But on 6-month annualized and looking at the individual components of core PCE, everything from the sticky housing to super core being roughly where it was in the 4 years before the financial crisis 20 years ago, Looking at durable goods probably going from deflation, which actually subtracts from inflation, to 0 to positive slightly based on all the leading indicators. I think inflation's pretty sticky. And to your point, Kelly, the first drop is usually fear of worse outcome. Think of it as like a movie with the first of an original series. The second one is a little underwhelming because you already know what it is. You know what you fear, and it's usually less of a drop when the reality sets in.
Right, exactly. So, this comes, and I'm sure it hasn't escaped your notice, that a bunch of people are now upgrading their year-end price targets, as we just mentioned, because the market has been such a stalwart. What do you think explains that?
Well, right or wrong, we tend to go, we tend to make our forecasts not really connecting with what other strategists say. If you overlay strategist consensus for year end against the actual S&P 500 5 years on a, pardon me saying this, on a Bloomberg terminal, you'll see that the market is mostly just following what the strategists are following what the market's doing. They're not really thinking outside the box with big, bold numbers. So a lot of them, including today, that one you just mentioned, was a catch-up. But we actually see, again, some weakness in the second half. It is a seasonally fraught period, May to October, usually about 60 to 65% of the time in the last century. And I would be cautious because there are signs consumers could slow down. Just the early hours of Amazon Prime were pretty disappointing. And you're seeing data like that start to crop up. Slowing economy, slowing earnings, sticky inflation, less Fed cuts. You mentioned employment being okay. Why would they cut it all anytime soon? So we think there's going to be a pullback.
Maybe you have access to some data I haven't seen yet, Barry. You think Prime Day's off to a slow start? Do we need to let you go so you can get clicking over there?
No, I mean, I just noticed that headline and, dozens of other headlines that have crossed. I think the consumers bought a lot of what they need before tariffs, and you see it with automobile sales, vehicle sales. I think they're going to pull back a little bit with all the uncertainty, add the business uncertainty, which affects the capital spending in a bad way. I don't really think second half GDP is going to be very good. Earnings are going to be slowing on the analysts cutting their estimates. Revisions ratios go down. Price earnings ratios are extraordinarily high, and treasury yields are going the wrong way right now. So again, I'm not very good at bubbly, kind of euphoric markets, which is what we've been in. I'm better at bottoms, but I just feel like this really reminds me of some of the sentiment that I remember back in 1999.
So for you, this still looks just way too. I think a lot of people are sympathetic with that and worry about that, and will appreciate your point of view. Barry, thanks for making the time to join us today.
Good to see you, Kelly.
Barry Bannister with Stifel. He mentioned Amazon. Let's dive in there for a moment, with the online retailer extending Prime Day from 2 days to 4 this year for the first time ever. Stock's down about 1%, although my next guest sees big gains ahead. The 2 extra days of deals, he said, should boost their gross merchandise value to upwards of $20 billion. Let's bring in James Chuckmuck. He's the CIO at Clockwise Capital. I don't know if you've seen any headlines, Chuckmuck, suggesting they're off to a slow start here, but what are your expectations for Prime Day?
Yeah, I think the move to 4 days is a big deal, upwards of $20 billion in revenue. I don't think that the street is fully accounting for that. Could add another point of growth in the second quarter, or in the third quarter rather, pushing them into the double digit range. And we think that, they'll continue to take share. Their logistical prowess, their efforts on the AI front will shine through, and we'll see data around that. So, it's one of the few mega cap names we continue to like. We've been shifting the portfolio broadly from mega cap, larger cap names to smaller cap secular winners. And Amazon's one of the few that kind of we've let linger at an oversized weight.
Yeah, and why is that? I mean, you could say, well, there's so much more excitement around, those companies who are more squarely diving into the AI space, right? Like Meta, for instance. Amazon, meanwhile, okay, it's got the retail business, obviously AWS is a juggernaut, but why is this one so attractive for you?
Yeah, sure. It all comes down to expectations. Where are the street's expectations? Where are the buy side expectations? We just think that the bar is set lower for Amazon and some of the other names like NVIDIA. I do like Meta. I think we added Apple back when it pulled back to 200. We think that the risk reward is getting a little bit better. But ultimately, we want to move into smaller cap names. We like the Circles of the world, the Reddits, the Palantirs, the Robinhoods. We think that's where the outsized gains are going to accrue from. So we've been just reallocating capital towards smaller cap names. And to echo a lot of Barry's points, we do think that, the growth expectations for the second half could be slightly challenged. So we have been raising our hedges into this strength.
Yeah, your comments remind me very much of what he was kind of talking about as well, these concerns about overvaluation. But that said, we've come roaring back from the lows. Does that give you any pause? The fact that some of these, the mega caps are performing the way that they are, the earnings momentum they have, I mean, it does seem based on real solid fundamentals. And even some of the smaller names you mentioned, these are hardly like beaten up, left for dead small caps. Right? I mean, we're talking about Palantir and Circle.
Yeah, no, fair points. Well, I'll say this is not 1999. I think the productivity boom ahead of us is underappreciated and will be gigantic. And those companies are squarely in the middle of it. That said, I do think that a lot of these companies in the market, broadly speaking, have gone to levels far above fair value. The market, as we see it, has increasingly become GameStopified. In the sense that, the resilience of the retail cannot be discounted. I think fund managers have to reevaluate the way they think about the market, valuations, momentum, and we've been doing so. We've been adapting to that, and, the things can...
Ya tengo una lista cuenta, no, bueno, ya tengo una cuenta lista para mañana operar temprano, ya. De liquidez fue poquito, de ganancia fueron $10 nada más, eso es poquito, pero pues son $10, a nadie le quita eso, ¿no? Genial, ok, a ver, sí es cierto, creo que esa estaba lista hoy, no, ¿por qué no? Ok, bueno, vamos a vender esta, voy a poner esto antes de que se
I mean,
quite.
look, 25% of our ETF is hedged. We're effectively a net zero in our hedge fund. In terms of net exposure, we've been systematically adding shorts. We think that a correction of 5 to 10% is not out of the question. We're at 22 times earnings for the S&P. Growth rate expectations for earnings are 13% in the back half of this year, which is more than double what is expected in the second quarter. Yields, as Barry said as well, going in the wrong direction. And we're not sure that the 3 rate cut estimate that the market's pricing in with the Fed fund futures may be right. What if it's 2 cuts or 1 cut? So you have negative surprise potential. We're just riding this momentum while we can, but ready to pivot in a much harder way. But certainly cognizant of all the risk factors in the market.
Yes, you do see, kind of concern about if inflation is stickier than we expect it to be, just like Barry was saying. James, appreciate it. We'll leave it there for now. James Checkmunk with Clockwise Capital. And well, speaking of inflation, the president holding a cabinet meeting at the White House right now after announcing more than a dozen countries' imports are set to face higher tariffs on August 1st. Megan Casella is in Washington with the latest. And Megan, he's continuing to make some headlines on the tariff front. What can you tell us?
Absolutely, Kelly. A lot of talk about trade in this meeting, which has gone for over an hour now, meeting with his cabinet in there. The biggest news we've gotten so far on the trade front is the president appearing to announce a few minutes ago that he will be imposing a new 50% tariff on all imports of copper. Take a listen.
And so we're going to be announcing pharmaceuticals, chips, and various couple of other things, big ones. We did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out. Why don't you announce copper? And we did cars. And now, today we're doing copper.
Copper and lumber. What would that tariff be on? The sectional tariff?
I believe the tariff on copper, we're going to make it 50%. 50%.
What he's doing there, Kelly, is he's going through all of those investigations that have been ongoing into sectoral tariffs, saying the 50% copper could be coming as soon as today. And he also said those pharmaceutical tariffs could be as high, he says, as 200% on all pharmaceutical imports. But he did say there would likely be a long lead time for pharmaceuticals, something like a year to a year and a half before a 200% tariff would kick in. So many more details to come on all of that. But it's just a reminder that these sectoral tariffs are still coming, even as as there's so much attention on the country-specific ones. Just a couple other quick headlines to give you. He did say that a flurry of trade deals should be coming in the next 24 hours, but he says, to be clear, a letter means a deal. So as he's sending these letters to countries, that's what he's calling a trade deal that we should be seeing more within the next day or so. He described the EU, he says, probably about 2 days out from sending the European Union a letter suggesting maybe negotiations there aren't going so well. But he says with China, things are going well and that they've been very honest on our trade deal. Could mean good things for the flow of rare earth minerals, as we've been discussing. Just finally, Kelly, he spoke again about Jerome Powell, saying he wants to see somebody in the Fed seat who would lower interest rates. And then there was this interesting moment where he appeared to look to Treasury Secretary Scott Bessent and said, I like you better in the Powell context. I like you better potentially as a Fed chair. So we'll see if we get more on that. Kelly?
Meanwhile, copper's up 10% on those remarks. Megan, remind us what he had said about copper prior to this. Freeport-McMoran's up 8. These are big moves, so it does seem like people in this space are a little bit surprised to hear about this 50% tariff.
It's really fascinating. So this investigation was launched at the start of his term, and what he's doing with this investigation is saying that all imports are threatening U.S. national security. He wants to boost domestic supply of copper, says we shouldn't be buying so much from abroad. The Commerce Department has been leading that investigation. They get to set the rate. So you saw him in that clip sort of look to Commerce Secretary Lutnick and say, what will the tariff be? The Secretary recommends a level. He says 50%, and the President gets to sign off on it. I think that's higher than a lot of people expected. It does match the tariff, though, on steel and aluminum tariffs as well.
Interesting. Okay, Megan, appreciate it. Megan Casella recapping all the latest just really in the past hour. And coming up, we're at a tipping point in the Tesla story. According to Wedbush, they urge the board to act and set ground rules for Musk or risk jeopardizing the company's future. Dan Ives is here in studio to explain next. Plus, the so-called stablecoin summer is heating up, but not everyone's hopping on the bandwagon. Mizuho initiating Circle with a sell rating and an $85 price target. Today, Circle's at $207. We're going to speak with the head of one crypto hedge fund that's backed this company for more than a decade and expects even more crypto IPOs to come.
This is The Exchange on CNBC.
Something amazing is happening here. Teams have more power to withstand outages. That's because CDW Solutions architects are building more resilient IT and electrical infrastructures with Schneider Electric. With EcoCare remote monitoring services and 24/7 support, your organization has the power to do more than keep the lights on. Make amazing happen. Schneider Electric and CDW.
Small business owners, you got to stop doing what you're doing. Why? Because bookkeeping sucks. You shouldn't be doing it.
Not really had any kind of big breakdown. But
por cierto, noticias. Meta le dio muchísimos millones de dólares a uno de los ingenieros en jefe de inteligencia artificial de Apple. O sea, básicamente Meta Platforms lo que está haciendo es jalar al mejor talento para continuar con su proyecto de inteligencia artificial. Entonces, si vamos a Meta, no va a haber mucho movimiento en las acciones. Vean, o sea, centavos nada más. Pero es lo que están dispuestos a hacer para tener para tener el éxito, ¿saben? En la competencia, en la guerra de la inteligencia artificial. Listo, el spread, la diferencia sería menos no manches. Les voy a presentar algo al rato, sería entre menos 1, no, sería al revés. A ver, vamos a poner esto.
Consider with the overall pullback in the market, we've recovered pretty nicely here.
Yeah, for sure. And what really needs to be done is we have to hold on to this supportive area here, 705, that, like I just mentioned here, lines up with this volume node. So a bit of additional weight to that as a supportive level. Then just below that are our lows here, our relative lows, 681, our green line. That could be another area to watch. To the upside, well, the same level I mentioned before, 741. quite close to our +1 yearly linear regression channel, or standard deviation channel, excuse me. One standard deviation up from our blue linear regression line, our line of best fit. So potential resistance there. And if we were to just take a glance at our longer term chart, our 5-year chart here, we can see that, you know, we've left those old lows behind in the dust here. Heavier volume right around here, once again, around that 700 area, matching up with our +1 channel here. So that could be a supportive area, once again, based on this longer time frame.
Okay, yeah, so a lot to consider here, and up about 0.2% almost on the session, so at least hanging on to a modest gain. I almost said both of these names were lower, but to Meta's credit, they're slightly higher on the session. So now, as we do look to trade this name for example purposes, Alex, walk us through your thinking here, and of course leaning into a lot of the optimism we've seen with, frankly, no signs of momentum slowing.
Yeah, tough time to trade in terms of stocks near highs, but trending higher. And so going with the trend, but trying to increase the probability of success with a risk-defined neutral to bullish strategy. Looking at selling the 700-695 put vertical spread, trying to stay ahead of the earnings announcement that's due out at the end of the month. It's the July 25th cycle. 700-695, looking for a $1.50 credit. In that case, you could collect 150 max profit on $350 in risk. 698.50 would be the break even. So you got about 3% in cushion down to that break even, Jenny, but this is a stock that we know can move swiftly if there's some sort of news or even risk off in the overall market. So most importantly, it's risk defined. The 1 month EMA, that 21-day EMA that Rick talked about, down near that 700 line as well. So this could act as a potential support level. And if that happens, well, that's where we're making max profit at, which is right at 700.
Yeah, all these names will be reporting before we know it. So that's at least something to look forward to as far as catalysts, although I know Meta doesn't necessarily need one, and neither really does Apple, as Apple has been seen now as somewhat of the laggard of this AI hype cycle that's driven a lot of these really nice comebacks on the year. But unfortunately for Apple here, Rick, I mean, we've seen a recovery, yes, modestly off lows, but failing to really see that momentum that the rest of these tech names have really seen completely recover their share price on the year.
Yes, some similarities between this and our last chart. Once again, kind of stuck at resistance here. Though in this case, it comes after a rather lengthy decline and a much worse recovery off of those same tariff news lows. In this case, we never even really filled the gap that formed here shortly before that announcement around that 220, 222 level. For now, we have gotten stuck here, 213. We topped out there several times. We also formed an accompanying low point here near about 196. If you were to backtrack even farther here, you can see that matches up with another significant low from almost a year ago there. So for now, a range-bound trade kind of stuck in the middle, sandwiched between our moving averages here, our purple 250 2-day EMA, right on that same resistance point of 213, so extra emphasis on that as a potential ceiling. We can also see our two shorter-term moving averages, yellow 21-day and orange 63-day EMAs, are clustering closer together near about 204, 205 or so. This could be a supportive confluence for traders to watch out for, but really if we were to break through this trend line as well, that could open the door to that 196 level once again. And you mentioned momentum as well here. So momentum, according to the RSI, more of a triangular shape for a while here. We did break out to the upside above that 50 midline, but price is not really behaving as you might have hoped. As I said, we're kind of stuck at this resistance level despite the momentum improving. We broke out from here, but now we are trapped once again in this broader range.
Yeah, and a far cry away from highs at roughly 260 a share. So, I mean, given the wider scope of your technical analysis, has this been uncharacteristic for Apple, or does this give you any sort of pause in some of that recovery in the more midterm?
It is kind of concerning that we are stuck at this level here and that the recovery has not been as strong as some of these other big tech names. I mean, Apple is such an important part of our market here. You know, it's concerning somewhat, but, you know, for now, we are still on the verge of making another push to the upside here. Linear regression line, our line of best fit here, matching up with this smaller volume node near about 210. We have a larger volume node just below here, so a support supportive point potentially near about 200 or so based on that. But to the upside, the point of control, the heavy trading area is right around 229, which is quite close to our +1 standard deviation channel and these old highs. So quite a bit to consider in that area. And when we take a look at our 5-year chart here, just very quickly, for the most part, still trending downward though, still within this broader downward channel. We had this anomalous price activity during the tariffs. But you can see, if you look back at 10 years, these old highs and these lows, that's where we held on pretty firmly during that news shock sequence here. So perhaps that's a key point to watch going forward if things do continue to deteriorate.
Yeah, and it's been amazing to watch the overall market's participation in this rally, even with the exception of Apple, really. And I know they haven't seen all down days, but I do think this speaks to the lack of really upside that Apple's provided the market's overall just indices that it's in. So great point there and great takeaways from a technical perspective. Rick Ducat, our chart master. And now as we do look to trade Apple for example purposes, Alex, I mean, this name also reports, I believe, the 31st of the month, so we have a bit of time there, but perhaps looking to lean into more of the same and more of this somewhat neutrality that Apple has seen.
Yeah, maybe earnings will shake it out of this rut, but until then, maybe, again, spinning its tires just a little bit kind of in place. It does seem it has plenty of headwinds, as well as the fact that it is one of the biggest companies in the world, a big part of passive investors and portfolios that are doing index tracking type investments that maybe works as tailwind. So as a result, maybe it's a bit of a tug of war, and maybe this 210 level can act as a balance point. Gave it a little bit of cushion looking at selling an iron condor. 200 has seemed to be sort of a support level that it's based out at several times over the past couple months. And at the same time, it's been struggling to get through 220. So selling the 210, 220 strangle, buying $5 wide wings, looking for a $1.25 credit. Expiration stays ahead of earnings, Jenny. So you mentioned it's at the end of the month. This is the week prior to that. If you get a $1.25, the break evens would be $198.75 on the downside and $221.25 on the upside. 3-to-1 risk reward. You risk $375, chance to make $125. So neutral, not the most fun trade. Sometimes you got to root for boring, but it's a relatively short-term trade as it just goes out to that July 25th expiration.
Hey, neutral still conviction, because obviously things can always change in Apple as rapidly as they've fallen. So it's still definitely seeking conviction, just looking for, again, more boring, more of the same for shares. Now, we'll leave it there for our Chart Master segment. Coming up next, though, it's time to dive into the latest with CoreWeave. After shares quadrupled following their IPO, we're seeing some analysts now turn to the sidelines, especially following that deal yesterday, of course, to buy Core Scientific. So we'll discuss more coming up next.
Cierre de la bolsa. Está entrando más luz, ¿no? Hasta yo creo que ya sí.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab. Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast market, ready for you, ready to go at
Listo. Entonces que andábamos viendo meta, ¿no? Pero ya fue meta. Miren, $2, nada importante. Las chidas, las que yo quiero que vean esta es una, esta es otra, esta, y esa, y esta, sí, también esa. Creo que desde aquí, de hecho, porque, o sea, amanecimos en $1, 1.20, ahí está. Y vean ya ahorita, bueno, ya yo la vendí como en 3.80, 3.90. De hecho, ahorita tengo que checar esto porque nada más saltó y luego empecé a buscar la venta. O sea, empecé a registrar todo para la venta y listo, ¿no? $500 en esta. Ah, tengo mucho trabajo, me lleva. A ver.
Was a bit more detailed, so we'll cover them a bit more, but both say that they view shares as fairly valued right now. For Mizuho, they downgraded to neutral from outperform, but they raised their price target to $150. That's up from $70. So a pretty substantial mark. We're at now more than 2x. Now, of course, that follows that Core Scientific pickup, that $9 billion all-stock transaction that they're talking about. And that's a combination of two significant players in the AI world. So the acquisition itself is being viewed positively despite the red we saw from both companies yesterday and these downgrades. It's just in the short term there are some potential issues. So Mizuho does say they view it positively. They note that CoreWeave will allow them to verticalize the infrastructure supply chain while driving significant cost synergies and enabling more financial flexibility. But they do consider the risk-reward profile as balanced right now because they have a 300% stock price increase since the IPO. So just the last 3 months. So, you know, they're pretty high up there right now. They also said that the price target increase reflects a recent appreciation in comparable company multiples, also the growing demand for AI structure, which we continue to get more data on, and what Mizuho describes as, quote, a means of efficiently acquiring additional capacity at scale. So I know we talked about this a bit yesterday, Jenny, on the show, but they're going to have a lot more capacity at this point with this acquisition. So long-term positive, short-term some issues. Stifel did cite those near-term issues more prevalently. They did their downgrade from buy to hold. They cited near-term challenges despite recognizing those potential long-term benefits. They raised their price target from $75 up to $115. And they did say the repositioning of the company as a vertical data center provider does change their valuation structure, adding they do think they're fairly valued, but short-term there are some potential issues. Macquarie and Barclays have not changed their ratings. Macquarie has a neutral rating, $65 price target. Barclays equal rate with a $100 price target. So pretty wide swing right now from the analysts.
Yeah, that Barclays note obviously kind of reflects consensus too. It's neutral, which is what the majority of the analysts, 72% of those who cover it have. And the average price target of 19 or so compiled by Bloomberg is right at $100 a share, which is their price target. But I think Greg Moskowitz of Mizuho really highlighted what I think makes this so difficult, and I do not envy. We were talking about this with Circle earlier. We're talking about a growth stock, not a lot of trading history, that moves around a lot in the near term. He highlights this. He said, hey, this is a highly volatile stock. It's going to have risk to the upside. It's going to have risk to the downsides. But they're trying to figure out what is this worth and where will it maybe be trading a year and a half, 2 years from now, a year from now. And as traders and as market commentators, we get stuck in today. And today, this stock's at 150, and we're hearing you just moved your price target up to 150, and we're there now. The other analyst moving it to like 120, and it's like these are both neutral. These are both neutral, but it just reflects how volatile the stock is.
And, it's interesting, too, you're talking about the valuation. It's so hard to value. They've only been public for 3 months. They've had 300% growth in that time. It's very hard when watching the stock price to have any idea. But right now, I mean, they're trading at significant premium multiples. They have an EV/EBITDA ratio of more than 58 times. So not an easy task for these analysts trying to figure out how to price out this company and this stock. But I guess the overall message is some potential short-term issues. We could see some volatility in the price, but long-term, across the board, everyone seems to view this as a positive acquisition.
I definitely think so, especially because right now, if you look at their revenue, it's heavily concentrated. They have about 72% of their sales derived from Microsoft alone in the most recent March quarter, which is wild in itself. So, well, that does oftentimes work, and I mean, Microsoft is not a bad partner to have. It also then tells you diversification is going to be critical here as we move forward and see a more hopefully signs of mature company as it does expand its legs here and continue to trade with more duration than just 3 months. So with all that being said, now as we do look to trade this day and the difficult job of sort of gauging then some of this volatility, I mean, it has had a pretty brutal week now just over the last 2 sessions.
Yeah, I think there's one last thing to highlight too. This hasn't been public that long, and there's a lot of people in the investment banking world who make a lot of money to make sure 300% returns post it going public doesn't happen in a month, because that essentially means all those insiders and those who were, in the private investment space just sold their shares pretty early to allow for this to go public. And so they want to value it as close to market value as they can. And so it goes to show just how momentum driven this stock's become. All that said, I hear the analyst calls. I see, maybe what those road shows valued this stock at. But it's a momentum stock. This is FOMO. We're looking at an upside play here for this particular example trade. It's a call calendar spread. Most importantly, it's risk defined. But if you think this stock has another run, maybe back to those highs, or at least on its way up to those highs, it stops at 170. This one would have a chance to make some money. Looking at selling the July 18th 170 call, buying the August 8th. So it gives you about a month's worth of time to that long option and about 10 days or so to that short option. The idea here is looking to reduce the debit overall down to 250, means your total risk on this trade as is $250, but it gives you that upside exposure, Jenny, where that mountaintop risk profile peaks out at the strike. It's customizable. But if this stock is at 155 now and it starts running its way to 180, 185 again over the next couple weeks, along the way, it would potentially see 170. It would maybe give a trader an opportunity to manage this position if they so chose. But most importantly, if it never goes to that and it just goes straight down to 100, like some of these analysts think, or even lower, you know your risk going in, and it's going to be limited to that $2.50 debit per the spread, or $250.
Which I think is so important, as we know this name, as we've all discussed. I mean, not one that is volatility light, at least. So definitely not for the faint of heart when looking at some example trades. We'll leave it there, though. Appreciate that, Marley Caden, of course, for all of that insight. And now coming up next, though, we will stick with our tech conversation. We'll be talking, of course, the latest with Elon Musk and Tesla. Tesla up about 2.3% today, as well as the broader Mag 7, specifically NVIDIA and the rest of tech right now, continuing to make actually a pretty decent session today. NVIDIA up about 0.8%.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning
Hermoso,
at its finest.
Brock.
Tune in live
Bellísimo.
or on demand.
La bolsa es una máquina impresionante para hacer dinero. Impresionante. Pero bueno, vamos a ver. BTSC, aquí estás. No, pues ya, o sea, 3 para 5, bellísimo. Hermoso, hermoso. Ahora, de que se puede hacer dinero, se puede hacer dinero. Claro que sí. Ya registré, a ver, aguanten, estaba acá. No, esperen, envío. Envío de Pepe, envío. A ver, esto fue, a ver. Tienes un primer day trade experience 5 días hábiles. Ok, va. O sea que tengo 2. Ok. Entonces mañana miércoles, mi estimado portafolio Pepe tiene 2 intradía. Entonces la fiesta va a ser mañana. La fiesta va a ser mañana para 1 o 2 de mis clientes. Ok. Estoy revisando quién tiene los de intradía para comprar y vender el mismo día en el mercado. Y pues seguir la regulación de la ley del mercado de valores, en la que no podemos hacer más de 3 intradía en 5 días hábiles. Solo podemos hacer 3 en 5. Si hacemos 4 en 5, nos bloquean. Entonces ahora sí que nos funan y no podríamos operar en 90 días. Y pues eso es horrible, ¿verdad? Ahora, ¿qué más tengo? With push.
As guardrails on the time commitment to Tesla. He thinks that Musk compensation should include time allocation requirements to Tesla. As we know, that's been one of the concerns that's been hovering around Tesla and why Tesla faced some pressure for a chunk of this year because of Elon Musk's ties to the Trump administration and working on Doge, et cetera. His side projects, if you will, side hustles, if you will. Establish expectations and accountability to reassure shareholders is underneath that second point. The third point he mentions is just oversight on Musk's political activities. He thinks they should form a special oversight committee to monitor if political involvement conflicts with Tesla responsibilities. Not so much about politics, but the actual execution of the role. And he said the aim would be not to limit free speech or even donations, but to enforce boundaries where the actions interfere with his actual duties as CEO.
You know, Diane, this is one of those situations where, like, as market commentators and those who are talking about this in the media, this is like gold. You know, we're talking about this spat between two really, you know, let's call them popular or influential figures within the world of finance, one being Dan Ives, an analyst who has certainly made plenty of headlines, and then you have the other being, you know, the CEO of a really, really big company that is very, very important to kind of the trading infrastructure. But I kind of see both positions, right? Like Dan's trying to say like, hey, I'm bullish this stock. This is what I think could help this company do better. And then Elon's perspective is like, I'm running this company. What do you know? And so it's super like it's funny and it's like perfect to talk about. But like both points I think resonate.
I think so too. I couldn't agree more with you with regard to that because, yeah, that's my takeaway too in terms of Elon Musk. He's like, it's my company. I can run it how I want to run it. But Dan has a great point, makes great points. One, and then two, as we know that Dan is a longtime bull in this company. He's maintained that $500 price target even when, I mean, look, Tesla has underperformed the Mag 7 year to date outside of the move that we're seeing today. But it's, you know, got some distance between where it is now and that price target that Dan Ives has on it, which is a $500 price target. He hasn't moved from that even when it was under more pressure. It's made quite some recovery since then, but again, there are still headwinds around it. And then, you know, him creating this new or announcement of creating a new political party that just creates some more, you know, kind of noise around it. So that seems to me what Dan Ives' point is. He believes in Tesla, but he worries about the side hustles. But you know, Elon Musk's point probably is, this is my company and I can manage multiple things.
I have to say, I had to see the tweet for myself or the post on X, and that's hilarious. I mean, I love that. I wouldn't even be mad if I were Dan Ives. I'd be like, hey, I got a response from Elon Musk.
He retweeted it.
Yeah.
He retweeted it.
Exactly, yeah. And I love that. So great insight there, Diane King Hall. Always appreciate it, all of her insight. And now, sticking with our broader Mag 7 theme, I'd now like to welcome in Daniel Rubino, the editor-in-chief of Windows Central. Daniel, thank you so much for being with us here today. And so now we're pivoting away from Tesla. We're talking some of these behemoths in the AI world, although I know many argue that Tesla is one of these important players. But NVIDIA still stands to be the most important. And really, what are you watching as far as what's working right now in AI, what's not working, near and far-term headwinds and tailwinds here?
Well, that's a lot to unpack there. Thank you for having me. NVIDIA, yeah, obviously they're doing quite well at the moment, and I expect that to continue. There is no shortage of demand for AI and where it's going in computing and companies that need their hardware. So I think they're positioned very well. We are seeing a lot of effects already, starting with AI in the workplace. The latest round of layoffs through a lot of the tech companies have been focused on AI. That is, they are trying to replace workers with AI, and this includes gaming with Microsoft and their Xbox console. So we're starting to really start to have the impacts here, I think, of what AI is going to mean for companies who are really just very excited, unfortunately, to replace workers with AI because there's so much potential here for productivity. NVIDIA, though, they're still the king of doing hardware. I still say there's a little bit to be concerned with the administration and tariffs. Of course, China is also a looming threat there as well. They've been able to, with DeepSeek, it looks like cheat a little bit in the sense that they don't have to require as much hardware to get the job done. And we're going to see, I think, a lot of innovation here in this space. But what may end up happening is you see a lot of small companies coming up, doing some great innovation or some breakthrough, and then quickly getting swallowed up by some of these bigger companies who are going to, absolutely need that technology. This is a race. Which country gets there first? And I don't even know where there is, but we are seeing some really big gains here in AI, especially in the PC market as well.
Daniel, maybe you can set the record straight for me, because I oftentimes think about how important the NVIDIA's sort of first mover advantage has been in this space. Not only did they take advantage of this first wave, but my understanding is it's not just chips. There's a software element to this product that they're providing these hyperscalers. And whenever there's a little bit more of a complicated product that you're giving, there's probably a learning curve associated with that. So if I'm Microsoft and I'm buying all these chips, even if an AMD or a Broadcom or some unknown name, an Intel, catches up, aren't they just more likely to keep going back to what they know in the future unless there's a substantial productivity increase or cheaper offering from one of these other competitors?
Yeah, no, it's a really good point. There has been, I would say, especially in the consumer market at least, a lag between the potential of AI and what is actually expected. But, this is why every company, and you bring up Microsoft, needs to be sort of almost independent of some of these bigger other companies like NVIDIA, because once you become dependent upon them, then, everybody's competing for those chips. So it's well known Microsoft has been developing their own processors internally for their servers as well as other computational needs for AI. They're also, of course, trying to distance themselves from OpenAI. They're not publicly quite saying this, but we can all read between the lines. OpenAI is going one direction, Microsoft in the other. Microsoft can't be beholden to just OpenAI, because if something changes there, something happens, their Copilot service gets really affected. So what you need to see is all these companies need to invest billions of dollars so that they can both get the hardware and software components done and be as independent as they can without relying on other companies. Because once you become reliant on them, then you have less choice in the market for pricing, and it affects everything else down the line.
Okay, and so to shift gears here ever so slightly, but focus on Samsung a bit, because they did report operating profits were down over 56% on a year-over-year basis. And I was reading all of these and read-throughs about what this means, either if it's like broader implications for the overall market, or if this just shows that, hey, Samsung is maybe not the competitor it once was. I mean, what did you read of some of those headlines we got over the morning?
Yeah, companies like Skynex and some of their competitors and the high memory bandwidth tools and memory that's used for AI here is an extremely competitive market. Samsung has had, I would say, a rough couple of years in the sense where their processors haven't quite made as much of an impact as they wanted on the industry yet, against Qualcomm and other companies there. And when it comes to AI, they're caught a little flat-footed, not nearly as bad as Intel was, I would say, but they're struggling. That said, I think Samsung has a lot of potential. Switching to their consumer side, tomorrow we're expecting Samsung Unpacked, where they're going to announce their new flip and fold phones, as well as updated watches, using some of their own technology there. And as someone who covers mobile, I'll say that for the last couple of years, Samsung really hasn't made a lot of waves when it comes to its hardware. And a lot of companies have almost kind of made fun of them for the lack of innovation. I think that's going to start to change tomorrow. If the rumors are about the new Fold phone that's coming out are true, this is going to be kind of where China has been going. China's been very competitive in this side. Unfortunately, due to the bans with Android, they don't compete in the United States as much. But I think Samsung is finally kind of getting its act together. They've made public apologies before over their lack of innovation. There's also a rumored trifold phone that they're going to be working on that may be due out later this year or early next year. So I'm actually pretty excited for Samsung. The mobile market is flat. There are little spikes here and there, but they're timing this right for the holiday season. And I think these upgrades will actually be significant, especially for the watches, too. There's some really neat innovation that's coming there.
Daniel, real quick, last point. As we're starting to watch this AI race, kind of solidify and come into focus, it seems names like Apple, names like Alphabet are pulling back on the range and trying to find the winning horse. Do you think that's a good strategy for the companies that didn't seem like they were keeping pace?
Yeah, you mentioned Apple, and they're definitely in a tough position. I'm a little concerned about them. Their services are doing quite well. The new F1 movie was a huge hit for them, and there's rumors that they're going to try bid on the F1 rights next year. So from that perspective, they're doing well. When it comes to their software, AI, including their phones and the latest iOS versions, I think they're starting to make some missteps here. Of course, they did miss the big AI boat, so they're relying on other companies right now as they quickly scramble to, build up their own internal systems. Again, especially a company like Apple wants to be completely controlled from the top down for the hardware and software, but they're really not there. They do have the hardware. I'll say their processors have a ton of potential for AI, and they're already thinking about using those for server farms for developers. But when it comes to the software and the magic behind there, they have a lot to catch up on.
Good stuff. Daniel Rubino, we appreciate it so much. You stopping by, Editor-in-Chief, Windows Central, with the Tech Space update. So we say goodbye to Daniel. We welcome in our next guest. That's Jeff Pierce, Senior Manager, Derivatives Trading, Charles Schwab & Co. for Under 30. And today we discuss Sunrun. Jeff, good to see you, my friend. And obviously this is a sector-wide move in response to some fiscal changes on the policy front. Give us the latest from what you're watching.
Yeah, of course, if you've been watching these stocks, some sharp moves up and down as this bill has kind of come to pass here. Solar stocks have already been hurt coming into this year by demand dropping, largely due to interest rate challenges, some consumer spending concerns. We saw residential solar installations down quite a bit in 2024. And of course, costs due to tariffs. Now we've got this bill, which is cutting the ability for a lot of tax credits for solar. We did see KeyBank move Sunrun from underweight to sector weight today without a price target. They cited the dissipation of immediate regulatory risk for the upgrade. They said the company lives to see another day after the provision in the big, beautiful bill denying investment tax credits to leased equipment was modified to exclude solar at the last moment. The firm says that this allows one of the most popular residential solar deployment models to remain intact. However, they say Sunrun's vulnerability to regulatory risk has been laid bare, and should restrict multiple expansion in the medium term. So not a great note, but a little bit of optimism in what's been a pretty pessimistic area to trade.
Yeah, do you think there's any sigh of relief that at least we know the perhaps extent of some of the government's lack of support, or like the government pullback of some of those tax incentives plans that we'd seen under the Biden administration? I mean, at least now we know perhaps the extent of it. And I guess things could always evolve and get worse, but I think that maybe that's the sigh of relief here.
Yes, I agree 100%. I think the relief is we know what's coming. It's now up to the companies to kind of make their decisions and adjustments to be able to combat some of these issues. And there was some positivity, or at least a little bit of relief out of some of the bill. Under the new bill, solar and wind projects that enter service after 2027 would no longer be eligible for credits. There's an exception, though, that projects that start construction within 12 months of the bill becoming law will qualify, giving them about 2.5 years to come online in order to take advantage of those credits. There was also the excise tax, which the Senate removed, which was a big deal. That was certainly going to be an issue. And then there's purchases agreements as well, which I think, if a lot of these companies like Sunrun lease these products. A lease involves a fixed monthly payment for a solar system. These purchase agreements involve paying for the electricity generated by the system. That product seems like it will be able to continue. So that's a positive note for a name like Sunrun.
Yeah, I think a good point there. And Sunrun today, unfortunately, down another 11%. And I mean, perhaps maybe the greatest lesson of all of where things can continue to fall. I think many were still betting on this name several standard deviations ago at this point, but now down below $10 a share for Sunrun. Appreciate it, Jeff Pierce, for all of that insight. And as we do close out the show, Alex, I did want to note that we are a bit more optimistic than where we started, as I was calling things boring, but right now firming up in at least 3 of the 4 major averages.
Yeah, we have been back and forth, but in a tight range throughout today's session. In the SPX, I'm watching 62.25. That's sort of been the balance point throughout the day, so we'll see if that continues to be the case.
Yeah, and a decent also recovery here in the NASDAQ, with still the Dow as our lone laggard. But that'll do it for Next Gen Investing for this Tuesday. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn.
The stock is at an all-time high, so a lot of things are working in its favor right now.
Yeah, certainly the AV overhang and the progress in the AV industry has been a big positive. And also the demand signals look really good for Uber right now. We expect strong delivery results for 2Q. So a lot of things going well for the stock. We think it's definitely a long-term beneficiary of AVs. That'll lower the cost of rides and increase demand. And I certainly think drivers will also be around for 10 plus years. And it'll be a nice hybrid model where you have AVs and drivers filling in during peak periods.
Today, Waymo also announced it's coming to Philadelphia to kind of test its technology. How do you think about shares of Uber vis-a-vis shares of Tesla?
Certainly, I think Waymo is rolling out to more cities. We think Uber has an opportunity to expand their partnership with Uber, with Waymo and Uber. So expect more things to come on that partnership front. And some of these markets, I think you will see Waymo EVs on the Uber network.
Does Uber benefit financially from this right now? Do we know?
Right now, the take rates are not disclosed. We would assume they're lower than their current model. But I certainly think the model will evolve, and those take rates could go up as the cost of the vehicles come down. So that's an impediment to more rapid rollout today. But over time, as those vehicle costs come down, I think it could lower the cost of Uber service and drive more demand.
Yeah, that seems to be the key. Whatever they cost, $250,000 or something. I don't know if it's still that high. Justin, thanks for joining us as Uber shares near $100. It's pretty impressive to see. Appreciate your time. Justin
Great. Thanks for having me on.
With Bank of America. That's it for us. Thanks for watching The Exchange. And Dom Chu is in for Power Lunch. We should also be joined by the Commerce Secretary, Howard Lutnick, right after this quick break.
When I found out I had diabetes, I was told my life.
Ok. ¿Es diabético el de los Jonas? Yo no sabía. Pero bueno, bien, básicamente ahorita ya está relax la situación, o sea, son las 12 del día.
And welcome to the watch list. I'm Sam Bardas. It's 2 p.m. here at the New York Stock Exchange.
Sí, lo de las opciones, esas cosas. Ya básicamente a las 12 ya como que se acabó la euforia. ya pasó como lo más importante. Obviamente yo voy a seguir aquí, tengo un chingo de trabajo, estoy hasta el gorro de trabajo. Qué bueno, ¿verdad? Pero mientras vamos a seguir viendo el mercado, Stack Report, Technical, ok. Vamos a seguir viendo el mercado. ¿Y qué más? Mm, ¿Qué más? ¿Qué más? Solo eso por ahora, sí. Sí, porque bueno, también hay que hacer el análisis semanal, eso lo haré al cierre, pero ahorita, ahorita que lo que estoy haciendo es registrar las compras y las ventas porque compré hoy, a ver qué compré, que esto va para TikTok al rato. Compré, para, compré esta empresa, ProKidney, les autorizaron un proceso clínico chido. La compré en a ver, esperen, en $1.22, vendí en 3.84, o sea, como por acá, pero pues duplicó la inversión. O sea, solo fueron $500 que al final GBM tomó 502, entonces fueron 1.573 de rendimiento. Entonces, el spread son 1.071.77 y mi comisión son el 30%, son $321. Entonces, pues claro, 700, aquí está, $750 básicamente son para el cliente y 321 para mí. ¿Qué más tengo? Lo de ayer fue ASST, también fue buena hasta aquí, pero esa no me dio tiempo. Ayer tuve una reunión aquí presencial, vino un camarada de marketing y tuve una reunión de negocios con él. Pero compré esta cosa, esta la compré aquí en $4.38 y solo fueron $300, solo tenía esa liquidez en la cuenta del cliente, entonces pues adelante. Y vendí las 68 acciones en 9.65. Básicamente de los 299 que tomó la casa de bolsa, 660 fue el resultado. El 30%, ¿en serio? Ah, no. El- sí, el 30% de 361, que es la rentabilidad, es el 121%, para mí son $108. Entonces, básicamente en 2 días ya generé $431 para mí. Que eso se pagan a fin de mes, claro, a fin de mes o en 2 meses, ya yo le diré al cliente. Dependiendo cómo esté el de su cuenta, porque no me gusta cuando que me paguen cuando su cuenta está abajo, o sea, no se me hace justo. Y mi trabajo es simplemente dar resultados. Si no hay resultados, yo no tengo derecho de cobrar. Es una de las cláusulas que están ahí en el contrato de confidencialidad entre servicio profesional y cliente. Pero bueno, mm, ¿qué tenemos? Futures all-time hike. Sí, claro, pues este mes vamos a ver máximos históricos todavía hasta agosto. En agosto se va a poner fea la cosa. Para ya septiembre, octubre y pum, vámonos. Pero bueno, sigamos.
Another day and another tariff. I know Lutnick's on the air right now, so perhaps we'll get some lines from him too. But, you know, as far as where they get this stuff from, I believe it's Peru, Chile, Canada. So as you say, it'll be interesting to see if they can tap some of that domestic production, if that does certainly help things along. But switching gears to another story you've been tracking, we've been looking at some of the big bank downgrades over at the folks from HSBC. What are they saying?
HSBC coming out with a note today ahead of the bank's earnings next week. They focused on three names: Bank of America, JP Morgan, Goldman Sachs. They're said, talking about all three, a more cautious tone on universal banks and brokers following recent rally in shares. What do they mean by rally? Bank of America, the last 3 months, up 38%. JP Morgan up 36%. Goldman Sachs up 49% in the last 3 months. They recommend a more constructive stance on the super regionals, and they point to limited upside. Now, three things. They lowered Bank of America from a buy to a hold, price target of $51, but a little different tack on JP Morgan and Goldman. They reduced them from a hold to a reduce. The price target in JP Morgan, $259. Same on Goldman Sachs, hold to reduce, price target of $627. So ahead of next week's earnings, a little bit of caution on the banks. And a lot of the theme behind this is the incredible run that they've had. Like I said, big percentages in the last 3 months. They just think there's limited upside going forward. Sam?
Thanks so much for that, Kevin. Kevin Hinks there, appreciate it. That sets us up very nicely for our next guest. Let's take a look at the bigger picture with Phil Blancato, who's the Chief Market Strategist over at OSAC. I'm going to start there where Kevin sort of left off, because you and I have spoken about the banks before, and it's really interesting as far as what HSBC is saying here at the moment, Phil, isn't it? Because, I mean, it's not about the fundamentals, it's just about the run-up that we've seen.
Well, the stress test looks like that's going to go really well. There's a lot of discussion around how strong they are, and we're going to find they're incredibly strong. I think what HSBC is missing is the trading volumes that they've been experiencing since this run-up. It's going to be a huge second quarter revenue boost. And here's where I don't disagree with HSBC, is that they are trading at all-time highs. But why I like Goldman, it's a buyback story. So the company that's going to grow earnings next year at 15% and buy back maybe $30 billion worth of stock. Now you're talking about an opportunity to really take advantage of where can I win on any market sell-off or correction there because of valuation. I think it's a bellwether name that's looking to access greater into the private markets by buying somebody. It's about their long-term story here and not where they're trading at today. I think they have much greater upside.
Okay, it's good to have diverging views, and I suppose we'll get a bit of an idea of how they're faring right now when we get the first cap off the rank.
Everybody, by the way, we just said to everybody not to sell. I'm telling you to buy it. Trust me, I know what I'm talking about.
It's good to clarify, But obviously the banks being one of the first cabs off the rank of the earnings season. So we don't have to wait too long to get a bit of an idea of how they're going. But let's talk about the sort of broader market, performance at the moment, because both Dan Ives and Kenny Pukari have described this market as exhausted today. Exhausted with tariffs, exhausted with Tesla, and, perhaps some of Musk's side hustles or distractions, exhausted even with some of the banks, maybe to HSBC's point. But would you subscribe to that description?
No, I wouldn't. And here's where I'll agree with him. You look at valuations, they're stretched. They're not inexpensive. But it depends on where you look. So we know what's happened in large cap, this gigantic reversal, the tech names, all these wonderful things. Well, look at the Russell 2 today.
Yeah.
Look at what the Russell's done. And any day we get marginal upside, you real strength there. Why? Because valuations are much better. International, which I have not loved, again, doing well today. Why? Because of better valuation. So I think assuming the market painting with a broad brush is dangerous. It is priced to perfection in the large caps. But at the end of the day, there's other opportunities. And I think this is your chance to, where can I pivot from some of these names, take some profits, which is never a bad idea. Remember seasonality here, the month of July, August, and eventually September are your worst quarters, especially that September, August timeframe. So take some profits, pivot to where you can actually get some better valuations. And if by some chance we get a cut going into September, those stocks are going to rip higher.
It was interesting, folks over at Goldman Sachs, David Costin raising his S&P forecast, I think 6,900 in 12 months. I mean, what gets us to there when you take a look at, as you say, internationals and the Russell 2K, the small caps, getting a bit of a look in at the moment. What happens? Where do we go from here?
I'm building a portfolio. I'm trying to put where to put my chips. Generally, you want to be careful where you're putting international and small cap. It's a 5 or 10% allocation. You're still getting predominantly large because of U.S. exceptionalism, which I don't think is dead. But here's where you have to look at that market and ask yourself, what's it going to take to push it higher? Well, you needed probably a solid year of earnings growth that accelerates and market returns that are flat. Well, where have we been since really last September? Flat. We're up a little bit on the S&P 500. Think about where we were, the rally up, the sell-off. Now we're back to all-time highs. But really, in reality, we haven't made a lot of money. Yet we've had 3 solid quarters of earnings growth. We get one more good quarter this quarter. Let's say we beat the 4. We end up at 10 or 12, which is, I think, where we're going to end up. Now you've gotten a bigger E, and your P stayed flat. What does that mean? We get valuations in that 2021 range. There's your opportunity to end the year in that price range.
So the Liberation Day was a bit of a fly in the ointment then?
You know, it's funny. I just was never bought into the rhetoric. I've talked about this a lot. Trump was never going to punish the U.S. economy so greatly that we would have a breakage in unemployment. And we're seeing a little bit of cracks now from some of the tariffs, where you really suppress the U.S. economy. It was going to be some negotiation. What do we end up? Probably 14% all-in tariffs, which means we will on average about 10, end up at about 14 on average. Everybody together. What's that mean? About $500 billion to the federal government, but ultimately to earnings. Earnings kind of care a heck of a lot more where interest rates end up than they do a marginal increase on tariffs. So I just don't buy into the rhetoric yet.
Okay, another story that certainly is driving the market today, a lot of focus on Amazon with Prime Days, obviously. Not a great start. I think Bloomberg was out with some numbers this morning saying that sales didn't get off to the best start, as I said, in the first couple of hours there. But it is something that is on your radar.
Well, I like Amazon. Why? Because it's basically flat on the year. But a 4-day Prime Day is interesting to me, but that's not what's got me excited about it. I think we forget about how much they do in cloud storage, which is exploding at a rapid rate. Then you put on Prime Video and Prime. These are 3 other revenue drivers that push us to a double-digit earnings growth next year. So less about the Prime stuff. It's kind of interesting. It's fun. But at a time when the U.S. consumer, albeit is spending a bit more smartly, where are they going to spend more smartly? I absolutely think it's Amazon. And why? Guess what we're about to enter? I hate to say this, folks, but it's very soon back to school season. So you'll see those numbers pick up steadily going into the fall and really push higher. Multi-billion-dollar spending seasons in August and September. And who's going to benefit? Amazon. So for me, it's a stock you should own of the Mag 7 that hasn't had the run up this year. Own it for the next 3 to 5 years and watch your double-digit earnings growth pay reward.
I suppose it comes down, as you say, to seasonality. It's stuff that really is a necessity when it comes to things like back to school. And another company that perhaps might also benefit from that is Costco. I mean, how are you looking at this company?
You know, when I think about anchors in portfolios, and we talk a lot about, fringe work, large cap, small caps, international, there should be anchors. And one of your anchors, without a doubt, is Costco. And the reason why I like it so much, it was once a discount retail store. Now it's become this international conglomerate of international consumers. Online growth is 5x right now, really exploding online. They're doing buy now, pay later, which is really an interesting scenario, and a Costco credit card. And you're watching foot traffic step up. So in the same way Amazon fits a niche that Costco can, Costco fits a niche that Amazon can. When I think about anchors, stocks you're going to set, forget, and own for years to come, the reason why I like Costco is it pays a decent dividend, but that's not it. It's now become center to many of the consumers in this country who are still gainfully employed, earning a wage above inflation. And where they're going to spend smartly, they're going to spend it at Costco. And it's not an inexpensive stock, but it's a stock you can own for a decade and set it and forget it.
Okay, and so then just lastly, where do you sort of sit on the rate cut expectations then?
So I'm going to take the other side of this one. I don't think the Fed was terribly wrong by not cutting. You could argue 425 on the front end of the yield curve versus the 10-year at 440 with inflation at 2.5. There's some numbers that don't make sense. But here's the problem. If you have a scenario where the big beautiful bill does get some economic liftoff, and I think it's a marginal liftoff at best. Right now, you're still looking at a scenario where we don't know the end result of tariffs. I'm not expecting a big inflationary event. What I would say is the Fed to cut here, we're probably one cut to 50 basis points behind where we should be. They should cut, I don't think it'll be September. I think it'll probably be December and then 2 next year.
Okay.
I believe we're in a deflationary world. Eventually we're going to get there, just not nearly as quick as everybody wants us to.
Okay, great stuff. It's always a pleasure to chat with you, Phil. Thank you so much for your time today and coming into the studio. That is Phil Blancato, who is the Chief Market Strategist at OSEC, joining me here. Okay, well, coming up, Options Corner, Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news of Datadog, Target, American Airlines. Stay with us.
Ok, nada importante. Lotnik, ya estaba ahí evaluando esta para ver si se vende o qué onda, pero ya. Mientras vamos a ver esto.
And you bet on America. And we'll see if the market continues to agree with that, as we get closer to August 1 and beyond. Secretary Lutnick, thanks for making the time and joining us after that meeting today. We appreciate it.
My pleasure. Good to see you.
All right, well, the president was making a wide array of comments on other things on tariffs in that cabinet meeting as well. So let's bring in our Megan Casella in our Washington bureau to outline some of the broad strokes and even details in what happened during that big cabinet meeting televised for the entire country and world, Megan.
A whole lot of news in there, Dom. It was well over an hour, close to 2 hours, that the president was in there with his cabinet and talking primarily, I would say, about trade, or at least making a lot of news on it. So a big day for trade news. Not only are those country-specific tariffs now postponed to the end of the month, but of course the sectoral tariffs that Secretary Lutnick just spoke about moving forward clearly, at least on copper and pharmaceuticals. The president said in that meeting that a flurry of deals will be coming in the next 24 hours. But he said, I want to be clear, a letter means a deal. He spoke about how you can't meet with all 200 countries, so they're sending these letters out. Secretary Lutnick saying 15 to 20 more in addition to the 14 sent yesterday, coming today, where they'll lay out the rate that countries will have to pay unless they lower their tariffs between now and August 1st. President Trump also being very firm today on the August 1st deadline, saying he will not be moving that again. That's the deadline for the country-specific tariffs to kick in. First, it was April 9th, then it was July 9th. Now it's August 1st, and he says he will not move it any further than that. He also spoke specifically about the European Union, saying they've been the toughest to deal with. They're so tough on our companies. He named Apple and Google. So he says he's about 2 days out from sending the EU a letter. Then on China, he says he's had a great relationship with them recently, that China's been very honest on the trade deal. And you just heard Letnick announce that trip to China, kicking off new dialogue in early August alongside Secretaries Bessent and the Trade Representative Greer. So more to watch on that front. Just one final one, guys, is the president did sort of reiterate the threat we heard earlier this week about an extra 10% tariff for BRICS countries. He was asked about that, and he said, yes, that will be coming pretty soon. So nothing set in stone there. We'd have to see an executive order, but he says he's serious about it. Guys.
All right, Megan Casella there with the latest on the president's cabinet meeting. Thank you very much for that. We've got lots more to come here on the show. First, is Amazon in its prime? Get it? We're going to speak to an analyst who is super bullish, plus NVIDIA's $4 trillion watch, and breaking down the sports empires and what they're worth. We'll be right back after this.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
When logic bends, when certainties shatter, when left is right and right is left, which way do you turn? Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
See, I made this one crooked. This moment. Story time for Sarah. It means everything to them and to all of us. At Evernorth, we make complex care journeys simpler with comprehensive coordinated care for better patient outcomes. Now, Sarah's grandma doesn't spend all day at the infusion center. She gets her treatment at home with Evernorth's specialty pharmacy, Accredo. So Sarah never misses story time. Evernorth Specialty Services, because every moment counts.
You make it through security so fast? The agents applaud. Your travel itineraries are so well written, they're on the bestseller list. And you have access to lounges that don't officially exist. That's why you rent with National, where you can skip the counter and choose any vehicle on the Emerald Isle. Because travel isn't a competition. Except that it is. And you're winning.
Which American states are driving business, surviving, and thriving? The ultimate competition, America's top states for business, is back. This year, states are tackling tariffs, budget cuts, finding local strength in a time of national economic uncertainty. Last year, Virginia took the honors. Which state will be the top state for business this year?
America's top states for business. The full list revealed Thursday and streaming on CNBC+.
Inflation and economic uncertainty have affected all of us. But if you have a structured settlement or annuity, J.G. Wentworth can help you get a lump sum of cash now in exchange for some or all of your future payments. J.G. Wentworth has helped individuals get over $290 million in the past year alone. So why live month to month in these uncertain economic times? Call J.G. Wentworth today at 877-CASH-NOW and get the cash you need now from your structured settlement. Call now.
Meet Omnilux Contour, an LED light therapy mask clinically proven to reduce fine lines and wrinkles. Find out how you can improve your skin.
¿Pero por qué se paró? Estoy... Ah, ya en 10 minutos no hago mi café del cierre de bolsa. A ver. se paró, ¿por qué no sabemos? Bien, pongamos esto.
Out in the August
Target
15th monthly
Same-Store
options.
Sales.
So these
Oh,
expire.
vean. Target es una empresa de retail que compite con Walmart, de cierta manera con Home Depot, porque Home Depot es para construir casas. Compite con Kruger y con Costco. El tema es este, están diciendo que down over 30%. A ver, vamos a checarlo. TGT, porque en sí todas las retail deberían de reportar menos ingresos este año. Por el costo de vida, por la inflación, por los niveles de deuda, porque las tarjetas de crédito están a tope y la gente no paga, o los indicadores indican eso. Pero bueno, 106.15, 101, ¿no? Pues sí. 106, el 10% serían 16. Está en 101, bajo 15, bajo un 9-10%. O sea, sí es un golpe para la acción. Claro, esa oportunidad, pues la verdad es que no me llama la atención el negocio de Kruger. No es mala, respetable quien tenga acciones ahí, pero no es de mi estilo. Listo, 1. Y este es de Mac, perfecto. Listo, entonces ya acabé aquí. Ahora tengo que registrar. Sí, cierto. Me falta un portafolio de un cliente.
Business travel's picked up, but American has probably the worst balance sheet out of the big three as far as debt on their balance sheet, and that's made them struggle a little bit. They haven't cut capacity enough, which typically is a bonus for these airlines. And you had crude oil prices bouncing off 2025 lows, so that's going to hit margins right away. Now, Delta Airlines reports on Thursday morning. Maybe this trader's setting up maybe for some weakness. If Delta's releases weak earnings, we're probably going to see a lot of the airline stocks down, and vice versa. If Delta Airlines earnings are good, we'll probably see a lift in the sector. But we did have some bearish activity in this one too, and this was out in the July 18th monthly options that expire in just 10 days. Trader bought 14,000 of the 11.5 strike puts. Paid an average debit of just 32 cents. This is a low-price stock. Not a lot of option premium in these puts. So the break-even where this trader needs to go below is $11.18 over the next week and a half. That's about just under 4% below the current share price in there. So maybe setting up for some weakness, but it could be somebody maybe just hedging a long stock position that they have. But yeah, if Delta Airlines earnings aren't good or they guide lower, that might hurt the whole sector. Maybe
pero el viernes hubo
trader,
mercado, así
it
que
pays
no
off
cuenta
for this
día
trader
hábil.
if that
Entonces
happens.
el día hábil comienza desde
Well,
aquí.
all eyes
1,
on that
2, 3,
report card
4,
coming up on
5.
Thursday. Thank you so
Puta,
much
entonces
for
hasta el
that, Tom
viernes.
White there. Appreciate it. Coming up, we'll break down Charles Schwab's June stacks report to gain some insights on Schwab client activity and trader sentiment. That's coming up next on the watch list.
Listo. Ok, eso era lo que
Trading
quería
at Schwab
checar.
is now powered by Ameritrade, unlocking the power of
Entonces tengo de aquí al
Thinkorswim,
viernes para
the
colocar
award-winning
un solo
trading
activo.
platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to the Watch List. I'm Sam Barnes, live from the floor of the New York Stock Exchange to discuss Schwab client trends from the past month. Let's welcome in our next guest, Joe Mazzola, head trading derivatives strategist at Charles Schwab. Thanks for joining us, Joe. What were the biggest takeaways from last month's report?
Pensé que era Elon.
Yeah, so we did see an increase for the first time in the last 3 months. It was small though. It's interesting, kind of given what the market's done. The rally off the April 8th bottom, just to kind of see that investors are still kind of maybe dipping their toes in the water a little bit and aren't jumping in head first. What we've kind of seen is moving maybe out of some of the single stocks into a little bit more ETF mutual funds. We're not seeing a lot of kind of the upside call buying that you might see when you get a move like we have. You're not seeing a lot of margin allocation, so people aren't basically loading up the boat. They're buying. And we got really good volume, really good activity in June. It's not something that's kind of stretching the limits. It's not something that I would call, the fear of missing out trade.
Okay, so interesting rotation into industrials and discretionary away from tech. Talk us through the psychology behind that.
Yeah, so that, I think that's part of it is that, we've had such a big rally in the Mag 7, particularly like NVIDIA. That was the number 1 sell. And so when, they look at what can I rotate into, two of the discretionary stocks popped up as 2 of our top 3, and that would be Tesla and Amazon. Tesla, in my opinion, our clients like to kind of do some bottom fishing, right? So when you see the stocks pull back, like about that 15% dip that we saw at the beginning of June, below the 280 level, that's where we saw a lot of activity that week on the buy side. And then with Amazon's just kind of been a steady mover all the way up, grinding up, and clients are adding that along the way too. So, NVIDIA, like I said, is the biggest sell. Now it's still the biggest, holding in terms of client percentage of their portfolios, or percentage of clients holding it in their portfolio is a better way to say it. But it is something that we continue to see trimming into strength. And Sam, what's really interesting about that is for basically 2.5 years, this was number 1 on the buy list, NVIDIA was. And for the second month in a row, it's number 1 on the sell list. It just kind of, it speaks to me of this, as you mentioned, the rotation, but also kind of de-risking.
Right. It's interesting, as I mentioned, into industrials. I mean, no doubt that speaks to also some of the themes around this reindustrialization, onshoring, which is what basically the tariffs are all about as far as Trump is concerned. Do you believe or anticipate that this could continue as far as a trend off the back of the big, beautiful bill and some of the clarity around tax?
Sure. And here's the reason why. If you look at strength in terms of sectors and percentages of stocks above the 50-day moving average, industrials is right up there amongst the top 3. And if you look at best performing sectors, kind of year to date, industrials is number 1. So that trade started back in April, and it's something that's continued all the way through. We'll find out more in terms of the tariffs and what that policy looks like. But as long as we keep hearing about the onshoring, as you mentioned, I don't see that trade stopping anytime soon.
Okay, and what were some other popular names bought throughout the month of June? I mean, you've mentioned Tesla, Amazon. Any others?
Yeah, Palantir was number 1 last month, number 2 this month. You look across the retail space. It's been a retail darling.
Mercados cierra en hora y media.
Clients have done well in that. Another one, which maybe kind of flies in the face of the de-risking, was Circle. And if you look at kind of what that stock did, it was up, fourfold in the month of June. And, if clients were able to kind of pare back some of that risk towards the end of the month and got out before the stock got cut in half, they did well. But that was really the only kind of meme stock trade that we saw that made the top 5. So those are the ones that kind of caught my attention. I think the other thing that is really interesting is the survey, because along with the behavioral study that we do in the Schwab Trading Activity Index, we also ask them kind of how they're feeling. And the clients became more bullish, actually the most bullish they've been since December of 2024 in terms of what they're telling us. But as you mentioned, it's not necessarily something where they're reaching for tech at this point. If anything, tech was the #1 sold sector across the board. It happens to be that they're moving into ETFs, they're moving into mutual funds, big movements into fixed income. And the one thing that they say, that could alter that is, could be news out of Washington, whether it's trade or and tariff policy, or if there's some type of more volatility around that.
Right, just very quickly, I mean, as far as what was behind that bullishness, I mean, what's sort of driving that? I mean, is it what they're hearing as far as, perhaps some of the rollback of the tariffs or some pricing in or expectations of the Fed rate cuts?
Yeah, I think what they said specifically was that some of that volatility that kind of shook the markets back in April really started to dissipate. And as long as they feel that there is some type of there is some idea of what the tariffs might be. Now, remember, this was taken a few weeks ago, so before yesterday and today. So we'll see kind of what the July report looks like. But they also noted that a calming of the tensions in the Middle East helped quite a bit. So a lot of the geopolitical and kind of tensions. And then also the risk that we've seen in D.C. in terms of passing of the big beautiful bill, and then also in terms of kind of the tariffs and trade policy. As that starts to normalize, you're seeing less and less of fear of volatility, and you're seeing the options market too. I mean, look, we got a VIX trading at 1670 today. You would think with all of the things that are going on between now and say that April 1st expiration of trade and the tariffs. Boy, you would think that people would be buying in protection. They're just not doing it. Between our clients and the rest of the field out there, it really is this steady grind up.
Yeah, excellent snapshot. Thanks so much for that. Really appreciate it. Joe Mazzola there, head trading derivatives strategist at Charles Schwab, for joining the show. Well, still ahead, Technical Tuesday. Kevin Horner joins us to take a look at technical levels for the S&P 500, ASML, and Rigetti Computing.
Esa canción me recuerda a Suits. Suits era donde salía Harvey Specter, que era como el abogado que todos queríamos ser hace 15 años. Así. Bueno, todos los hombres, ¿no? Más que nada eso aplica con hombres. Me está dando frío. Ah, sí, porque me tomé esa cosa. No, bueno. A ver. Ok, tiene una buena subida. No tenía idea de la empresa, la verdad no la compré, pero la puse ahí para que la miremos. $68 el barril de crudo. Interesante. Ahora que lo estoy pensando, si todo sale bien a finales de 2026, quiero ir a estudiar pagarme algo en Harvard, algo de inversiones, ya veré qué, pero quiero pagarme algo así. Ok, esta es la de Hub. A ver, Hub, I want the trade available, watch Bitcoin, ok, salary, ok, va. Entonces también esto ya quedó. Haciendo dinero desde su casa, qué cómodo. ¿Mm? Se quiere romper, ¿eh? Esta Game Square Holdings. Vean esa cosa.
Live from the floor of the New York Stock Exchange, let's take a look at a few movers in the market right now. Uber hit an all-time high today after Bank of America raised its price target on the stock to 115 from 97. The firm maintained a buy rating on shares, citing the no tax on tips provision of the one big beautiful bill for the price target hike. Bank of America says the tax benefit could provide a modest boost to supply, including supporting take rates. The firm also cited data from Bloomberg, second measure which showed modestly accelerating bookings growth for Uber. And CoreWeave is lower today after receiving multiple downgrades. Mizuho downgrading shares to neutral, saying that CoreWeave's extremely high volatility presents risk to both the upside and downside. Stifel also downgrading the stock to hold, citing key near-term overhangs and the repositioning of the company as a vertical data center provider. Both analysts are raising their price targets on CoreWeave and see shares as fairly valued at current levels. Well, it's time now for Technical Tuesdays, and for that, let's welcome in Kevin Horner, Senior Manager Trading Services Education at Charles Schwab. Thanks so much for joining us, Kevin. Nice to see you there. What are you seeing in the chart for the S&P 500 firstly?
Yeah, great to see you, Sam. I'll tell you what, this market continues to impress. We're looking at 2 full weeks now above the 10-day moving average. We've been watching the 20-day moving average for quite a while here, 10 weeks or more. And we've held both the 10-day now for about 11 sessions, and that 20-day in orange is really notable because it's caught up to the 6,100 level from which we really saw a breakout occur about 2 weeks back. So, you know, this is continuing a trend that we are surprised, to a certain extent surprised by, right? I mean, we've had some tariff headlines this week, some reminders of the expectations of the administration, and yet the market is just not showing any give back here. So I think short-term traders probably continue to monitor that 20-day moving average. Maybe the 50-day comes into play some time down the road, but we're a good bit away from that, somewhere in the neighborhood of about 300 plus points from visiting the 50-day moving average here. So, you know, this has been an impressive move, and I think traders just watching the trend, continuing to play the trend and stick with it, assuming that the major moving average here, the 20-day, remains held over the coming few weeks. You got plenty of optimism here remaining in the market, it would seem.
Yeah, that certainly seems to be behind the folks over at Goldman Sachs' view as to why they've raised their forecast for the S&P 500. Moving on to ASML, it's been playing a bit of catch-up since April. Talk us through that.
Yeah, exactly right. Playing catch up, had a nice push off of lows, up 35%. It did finally pick up its 20-day moving average, interestingly enough, back on April 23rd. That's the same day that we saw the SPX, the NDX, the SOX, all of them recaptured their 20-day. And so there's some positivity to take from a rally that began on the same day amongst multiple indices and multiple securities. What I find notable here has been the 3 consecutive bull flags that are trying now, the third one trying to resolve bullishly as we speak. We've maintained the 20-day moving average, like I said, since April 23rd. We've got a horizontal support at 78, which has been broken and tested successfully here with recent lows in the last week. And now you're working to break out of that bull flag to the upside. Now, the thing that's most notable to me here is that really far away red line up above. 975 is a potential target zone for short-term bulls. Shouldn't expect to get there on an overnight trade or anything, but if you just, once more, watch that 20-day moving average, potentially the 50-day moving average, it sure seems that things are shaping up more favorably in the near term here. You are also getting that golden cross 50-day crossing the 200 to the upside, notably at the volume point of control, right around 727 or so. So there's been some consistency here in this chart. There's been some bullishness in this chart in the most recent 3+ months, and it looks apt to continue here rather than get reversed anytime in the immediate future, perhaps.
Okay, that's ASML. Turning our attention now to Rigetti Computing. What are you seeing there?
Yeah, Rigetti's interesting, largely because, we've been talking a lot here on the network, external to that. The market is interested in quantum stocks. And the thing that I noted on this one, we actually looked at this one recently, back in May, because it broke through and looked like it was going through into a new breakout phase. And that happened right in the middle of May. We got through 14, but instead we got pushed back to the 50-day moving average and the volume point of control there, right around $11.10. Now, the 50-day moving average now is at 11.5. And what I was noting was the rally through the last 4 sessions here, breaking that downtrend line off the peak. So once more, looks like you could be staring at a continuation move, and new bulls could have joined the trend as early as 3 to 4 days ago based on the breakout of that downtrend line. So closes through 14 here could be really opportunistic, but if you're a new trader to this position, it probably means you want to see a new high close, which would need to be over 14.20, and then that might give traders an opportunity to target 18 up to the $22 or $21.90 approximate high we've seen in this stock. So again, a nice trend developing, a wonderful pullback that has maintained higher lows along the way. So if this can get through 14, bulls are apt to start pushing back into the name here for a potential momentum-based play.
Okay, Kevin, and before we let you go, what do you make of the overall market performance today? I mean, flat as a pancake over at the S&P 500, as is the NASDAQ. I mean, we've got the Dow continuing to stay under pressure. Obviously, data light, earnings light. What are you watching? What stands out to you in this market right now?
Well, honestly, I think the reminder here that we can't unload positions in a market that continues to maintain levels. It's one thing to take some profits and do so positionally and build some cash, but the market doesn't want, apparently, to give back much of this move. And it feels to me as though the optimism that has shown in the face of narrative headline risk doesn't seem to carry as much weight as the price actions carried. And so moving through specific levels, taking out new highs in the market are generally not a bearish viewpoint. So I'm encouraging viewers of the shows and everything to monitor the market closely to their own comfort zone. But obviously, if you're a trend trader, you're not given a lot of reasons to go against what's working right now. You're going to stick with the trend most likely. And, the one thing that I will say that's been encouraging to me has been the broadening out of the rally, meaning while we've taken a little breather in the last couple of days, we've seen other areas step back in and provide some of that leadership. So feels as though it is healthy at this point. We'll continue to watch our trends because that's what traders are paying most attention to, I think. But ultimately, I'm going to say that the big takeaway for me is resiliency in the face of headline risk. I think that we're continuing to see just that.
Okay, good to know. I mean, as you say, Russell 2K outperforming today, up 0.8%. So the clear winner, as you mentioned. Kevin Horner, it's been an absolute pleasure. Thank you so much. That is Kevin Horner, the Senior Manager, Trading Services Education at Charles Schwab. Still ahead, we bring in our panel to discuss crypto and how stablecoins fit in the future of finance. The watch list will be right back here.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me.
Les digo, ya no hay nada, estoy revisando mensajes, correos, todo. No hay nada ya, parece que se acabó la acción. Ya son 1:45, Bolsa cierra en 1:15. Ya cerré operaciones, ya registré. Me faltan uno que otro movimiento, mejor voy a ponerme a hacer eso. Y a las 2 que cierre la bolsa hacemos el análisis semanal. Es martes, no ha pasado mucho, pero pues hay que hacerlo, ¿no? Vamos a checar. ¿Sigue todavía? Y sigue todavía, no manches. Una maldita locura. Una locura. Pero bueno, estoy aquí para hacer dinero, así que... Ah, sí, es cierto, lo olvidé. Tengo que registrar todos los movimientos, ahorita lo voy a hacer.
Expectations of, how high we could go here?
Yeah, so as you said, up 50% this year to 250 billion in market cap and 14 trillion in stablecoin transactions globally last year. By the way, that's actually more than Visa's annual transaction volume. I expect to continue to see that number grow. I'm expecting numbers over $1 trillion not too far into the future from the market cap side. And all of it just comes back to the very simple fact that money is still too hard to move around the world. As a Canadian, I live that every day when I try and move money to my friends in the United States and or move between bank accounts around the world. And so stablecoins just starting to reach that traction point. And that 50% growth, I think we'll see it go even higher over the next few years.
Okay, so it's pretty rapidly growing. So, I mean, Andy, over $1 trillion market cap in the near future.
Absolutely.
But no timeline there. But, I mean, what do you think is the next sort of big story?
Well, for one thing, let's remember that especially in these tariff wars, U.S. Treasuries have sort of become a chess piece, right? It's not necessarily obvious that those are going to get sucked up by the rest of the world. All of these stable coins are usually collateralized or underfunded with U.S. Treasury. So the U.S. government, in passing the Genius Act, is creating a new customer for U.S. Treasury. So that's pretty significant. It's a healthy kind of move. I agree on the growth numbers. The volume numbers are also interesting because every time a stablecoin trades hands, that's a blockchain event. So whether it's on Ethereum, a Solana, a Tron, another blockchain, investors wondering what's blockchain for? Well, this is a perfect example.
Okay, and so Mark, I mean, I'm curious as far as I said, the next leg to get it to that $1 trillion market cap. I mean, what do you see happening in the second half of the year? You know, because as I mentioned, we've had some positive tailwinds as far as a sort of more crypto-friendly White House, as I mentioned, the sort of more mainstream adoption as well as institutional participation too. So can you give us a sense of what comes next?
Yeah, so continued work on the regulatory front. Yes, progress in the United States after some progress in Europe over the last year, but a lot of other markets, Canada, the UK, Australia, still a lot of work to do to get to a place where the regulatory regimes for stablecoins are clear. I'd also say the next big sort of topic on the agenda is going to be yield. If I'm holding a stable coin and I have access in order to pay for things, to save, I'm also expecting to be earning yield off of that. And we're starting to see the first set of stable coins, the Global Dollar Network or others more on-chain like Athena, which are offering yield back to users. And I think that's to users, to businesses, to basically anyone who wants to hold and use stablecoins instead of using fiat directly. And I think that's going to be a big part of the next year ahead and continuing to see that growth grow. Yes, in the US, maybe it's a little bit easier to get yield on your US dollars, but if you're in another market, it's actually quite hard to get that 4.5% that you can get through a stablecoin in the fiat space.
Andy, I saw you nodding your head. Do you have some thoughts on this particular use case?
The yield question is an immense one, but so is the borrowing question, right? Stablecoins don't have their own money market, yet a lot of borrowing and lending in the crypto community takes place. So last month, we started to calculate an overnight rate, like a SOFR for stablecoins, and that has trended around 5.5% for USDC and USDT, although it can be pretty volatile at times. So we foresee a time when, just like money market or Eurodollar futures, which are now SOFR futures, would trade for stablecoins, which would set borrowing and lending rates, create a term structure. So we really want to try to financialize stablecoins as much as we can, not only in the sense of the experience of the user getting yield, but the experience in the sell side of being able to set term borrowing rates. So we're building a lot on top of this infrastructure. They've been around for a long time. People trade Bitcoin against USDT or USDC just as much as dollars. So the adoption is great. I think that the institutional, the financialization part is going to be really fascinating.
Oh, absolutely. You know, when you talk about coming up with some of the products to trade this stuff, I mean, for the layman out there, I mean, could they potentially be, you know, investing in this stuff without knowing it?
I think the idea is that you want lending markets to be, even institution to institution, to be transparent and to be standardized and to be familiar. And that will invite new people in because they will recognize, oh, I know how a SOFR future works. So is there something that works like that in stablecoins? And if there is such a thing, the adoption gets pretty broader. That creates more liquidity, fluidity, right, and familiarity in those crypto markets. That will find its way down to utility for individual investors. But I'll go back to the other point, 14 trillion in volume, that has to trade on blockchain somewhere. So look at those layer 1 blockchains and see where those stable coins are trading, where those executions are happening. And when you think about what kind of portfolio you want to put together, that's an element that's going to be important to track.
Yeah, and I was having a fascinating conversation this morning about Bitcoin treasuries as well. But I do want to pick up on something that you said, Mark, too, about some of the regulation. I mean, clearly over the years we've seen that crypto is investable, even without some of those guardrails. But no doubt some of the barriers being removed would offer even more of a tailwind. But just want to get your thoughts on prices right now. I mean, as far as Bitcoin trading today, 109 levels, in the face of a pretty quiet old day in equities and what we're seeing in other asset classes.
Yeah, so I think much like Andy said a little bit earlier, I think we're probably in for a little bit of a flat summer across Bitcoin and across other markets as some of the tailwinds lose steam from earlier in this year in the United States, and new tailwinds are added. I would say continue to actually watch the stablecoin space as stablecoins continue to pick up as they gain market share. Expect to see more interest in Bitcoin as well, and especially among institutions and more traditional institutions looking at stablecoins as their first entry to crypto, and that very quickly turning into them investing in other inflation hedges like Bitcoin.
Okay, I suppose they're called stable for a reason. Gentlemen, it's been a great chat. Thank you so much. It's been excellent. That is Andy Baer there and Mark Greenberg joining us on the crypto space. That's going to do it for us on the watch list today. Download the free Schwab Network app available in the Apple App Store and tune in 24/7 on schwabnetwork.com. I'm Sam Vardas. Thanks for watching. Market on Close is coming up next on the Schwab Network. Stay tuned.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Changos, vai llover, puta. Sí, va a llover.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden. With an hour left in the trading day, let's take a look at where the markets stand right now as we take a look at the S&P 500 as I look over at our big board here. We are looking, okay, we're pretty much flat. It's a flat day. You know, we're slightly under on the S&P, 6227.29. The NASDAQ slightly up on the day at 22,705.79. The Dow down 0.3% at 44,262.47. And the Russell is our winner on the day, up more than 0.8%, 2232.87. And as we take a look at some of our futures products, let's see how gold and oil are doing today. The dollar mostly flat on the day as well at 97.17. Gold down more than 0.8% at 33.4630. Crude oil up on the day, 68.39 a barrel, and Bitcoin up more than 1% right now at 109,570. All right, well, now it's time for us to take a look at a few of our top stories for the day. To help us do that, I am joined by Jenny Horn. So, Jenny, let's kick things off with a company I feel like we'll continue to talk about almost every day together.
Yes.
Of course, I'm talking about Tesla.
Yes, so Tesla with some drama right now. But drama I will say I love following because it involves two of my favorite people to follow in this space being, of course, Elon Musk as well as Wedbush's Dan Ives. So Dan Ives did tweet basically directing at the board of directors saying take these 3 steps. They were a new pay package, which gets Musk to about 25% voting control, which then clears a path for the XAI merger, but guardrails then established for the amount of time Musk spends at Tesla as part of that pay package, as well as oversight on political endeavors. And Musk responded directly to this tweet to say, to quote, "Shut up, Dan." So in a nutshell, this is really what they're calling this tipping point for the Tesla story. And ultimately, they say the Tesla board needs to act now to set these ground rules for Musk going forward. The note from Wedbush, just to dive deeper into it, was called basically the soap opera must end. So Ives has argued that right now Tesla is heading in one of the most important stages of their growth cycle that we've seen, with the autonomy element as well as the robotics future now on the doorstep, noting the company cannot have Musk spending more money or time, frankly, on right now the political agenda, which requires just countless energy as well as the overall focus of the Tesla fundamental story. So I think that he's not alone in this thinking, but amazingly so, they do still have the highest price target among analysts at $500 a share.
You know, it's so interesting because we talk a lot about Dan Ives, obviously, but I feel like when I saw this headline, the very first thing I thought was he used his first name. He acknowledged that he knows who he is. So I'm sure we're going to hear a lot more about this coming up. But you said an interesting thing. It is, you know, the tipping point in the Tesla story is what Wedbush referred to it in their note with Dan, but it's also like an inflection point for Tesla. You know, they're trying to continue this sort of rebranding away from being a car company to being a tech company. And so much focus is taken away from that constantly by these other endeavors. So, I mean, it makes sense that at a certain point there'd have to be some action to secure the safety of the company. But whether or not that happens
remains to be seen. And and you know, Ives is also not the only bull that's been critical of this political activism. Actually, William Blair downgraded the stock earlier this week to the equivalent of hold from buy because of Musk's political plans and the rhetoric that, as well as the negative impacts on the spending bill that was passed in Congress that could have some implications on Tesla's margins and its EV sales. So throw that into the mix. That also isn't helping that you lose a massive incentive that was seen here in the U.S. to purchase EVs. And I know we talk a lot about the declining sales in Europe and the way that some of the brand perception of Musk being so tied heavily to the Trump administration, how it's really, we've seen a direct impact, especially in countries like Germany, which is their 3rd largest market. But I will say to that same narrative, here in the U.S. still matters so much more. It's 50% of their sales. China's roughly 22%, and Germany, which is their 3rd largest, is roughly 3%. So everything going on here domestically does still matter more to their revenue. And we could see some degree of an impact as a result of these now rolled back really incentives under the big beautiful bill, which I think is really where this whole drama started. And I know Musk has tried to say it's more of a matter of like the American people and making sure that we're exercising our freedoms and our rights. But I think that you could put it more plainly. He's probably not happy that this is another thorn in his side as far as the growth story for Tesla.
Sure, it certainly is hurting it. You know, look at them right now. They're down almost 7% on the day. Whether or not that's because of this current TIF or the notes that came out of the big beautiful bill that they're not going to get that EV tax credit and the rebates are not going to be there for them anymore. It's hard to say, but I mean, year to date, they're down more than 25%. So something has to change here in this narrative if they want to stay on top. And couple that with the Austin launch of Robotaxi, which is certainly not looking like they're going to be a heavy Waymo competitor, at least near term. They don't have the same level clearance, and they're working for it, but they still have a safety driver, and they had some videos that popped up that were unsavory and going the wrong direction on certain roads.
And they're behind.
Yes.
I feel like just the timeline of it, the fact that we've waited now, I mean, we've seen this Robotaxi event pushed back, and I'm happy we got the semi-launch, but they're behind Waymo just in terms of like time on the road, time testing these vehicles.
Yeah, the catch-up process is going to be a difficult one for them. But someone who has caught up is Boeing.
Who would have thought that today we'd be talking about the outperformance of Boeing versus Tesla? I would have never imagined the day.
And here we are.
Here we are. And, you know, I applaud Boeing for the hopeful continual recovery. I say that very cautiously because I've been here before, but they did announce their second quarter delivery figures, reporting deliveries of around 150 commercial aircraft in the second quarter, bringing their year-to-date total at around 280. But the widely watched 737 program accounted for around 104 of those deliveries. Well, the company also handed over around 24 of its 787 Dreamliner jets. And on the defense side, which I do think is a hugely important part of some of the recovery we've seen in share price, which is their space and security division reported 36 deliveries in the second quarter, including a mix of new and remanufactured Apache and Chinook helicopters. And year to date, the defense arm has delivered 62 units. But if you just look at actually the month of June, that's when things get really optimistic. It was 60 deliveries, the strongest monthly total in 18 months. Highlighting hopefully the improvements and again the return of U.S. jet exports to China. Strongest delivery month since December of 2023, which was just weeks before we saw that door plug blow out midair. So I think that this marks definitely a continual turning point because you have to see some of these financials match the narrative they're trying to push. But finally, it does feel like we're getting there.
And who would have thought that we'd be having a Tesla to Boeing pivot where Boeing's in the positive? But
No
you know,
kidding.
good for them. It's been a long road, a multi-year road at this point for them to sort of get back on track, and we'll have to see if it continues in this way. And we have to talk about Meta. And Meta versus Apple, I guess, is what we should really call it, not Meta and Apple.
Yes, Meta versus Apple, as we did see a lead executive of Apple that oversees their various AI models is now departing, of course, Apple for Meta, which is according to first Bloomberg reports. But now we've seen, I mean, this is just the latest string of hiring from Meta, who's been aggressively expanding its AI dominance through its Superintelligence Labs, otherwise known as MLS, which was launched back in June of 2025, so just about a month ago, to pursue this continuous generative AI build. And also fairly, I would say, in terms of their large language models, that's a huge portion of where this talent is expected to be focused, because that's been somewhat of the laggard in terms of their AI narrative. MLS consolidates Meta's Llamas models and their fundamental artificial intelligence research, otherwise known as FAIR research, to deliver what they're calling this personal super intelligence. But fueling this ambition, they've been poaching top talent from other companies like OpenAI. Sam Altman has been fairly vocal about that.
Very vocal.
Yes, as well as Anthropic and Alphabet's Google, DeepMind, and now Apple. So reshaping the AI landscape as far as this fierce talent war, I think what this more signifies is it doesn't necessarily mean that Apple is like falling apart, because I was seeing some commentary on that. I think it more so shows the money you're willing to spend right now. We haven't gotten confirmation that it's $100 billion in these $100 million, excuse me, in signing bonuses, but that's been floated where Zuckerberg is willing to shell out pretty substantial cash. And I mean, of their workforce right now, they have increased some of their spend right now by about $50 billion for around, or $5 billion, excuse me, for around 50 new employees. So that just goes to show their willingness to spend on these 50 new researchers that are, I think, expected to be pretty focused on this super intelligence arm.
Yeah, and I think you hit the nail right on the head, too, when you said we've heard a lot of discussion about, is Meta behind in the AI race? Are they taking it seriously enough? Well, if what Sam Altman, the CEO of OpenAI, said about them offering the $100 million signing bonus is true, they clearly appear to be taking it seriously.
They do, and they appear to be trying to at least maybe, if you can't beat them, join them. If you can't beat them, steal them.
And if you can't beat them, poach them.
Yeah, poach
Take
them.
their best players.
It makes me wonder why we didn't go into super intelligence and with these signing bonuses floated around.
It'll be our next career.
Yeah,
these
are hefty paychecks that I think we're all wishing, why didn't we go into this field? But I do wish for more and more of this to be seen as like monetization for Meta's AI, because to spend this much money means you have to be able to prove results worthy of the substantial cash they're spending.
Absolutely. All right, Jenny, thank you for catching us up on the top stories today. We appreciate it. The drama days are always a little bit more fun for us, so we appreciate you being here to catch us up. And that's, of course, Jenny Horn. Now let's turn our attention to the macro side of the market. For that, joining me now is James St. Aubin, the Chief Investment Officer at Ocean Park Asset Management. James.
Está aburrido, no está pasando nada. Miren, índices, porque tengo que salir, tengo que ver unos temas con unos inversionistas, entonces ya valió. Ya valió el cierre de bolsa, o sea, no voy a estar presente para el cierre de bolsa. De todas maneras, ya como de todos los activos están bien, tengo que hacer un desmadre con esto. Tengo un chingo de trabajo, tengo que o sea, es un desmadre, es un pinche desmadre. mm, Estoy pensando. Mm, ok, ok. Es que creo que ya es tiempo de contratar a una persona. Es que tengo que contratar a una persona que me ayude justo a la talacha administrativa que me caga andar haciendo. La talacha administrativa porque yo estoy en la parte de análisis. Análisis de inversiones y todo eso, ¿no? Este... en la escritura de reportes financieros, publicaciones de LinkedIn y todo eso. Ah, vamos a ver, miren. 0.8% abajo, 0.32, 0.6 y Russell es el que sobrevive. O sea, ayer al cierre, comprar el Russell estaba muy barato. Vamos a ver TNA, porque ya les digo esto ya para despedirnos. La bolsa cierra en 50 minutos, aquí está. Y lo tengo en otra, bueno, ya casi se acerca el After Hours, cuando cierro la bolsa y sigue el proceso de After Hours. ¿Qué les iba a decir? Sí, TNA. ¿TNA? Sí, ayer. Perdón, es que tengo muchas cosas en la cabeza. Estoy bajo muchos datos frente a mí. Ayer. Ayer el TNA bajó hasta aquí. Nos vamos a poner en horas, mejor. Bajó hasta acá. En los 35, mínimo 34.62. Siempre cuando son ese tipo de días, y ahí tiene que ver lo del taco trade, el título del video de YouTube, es que cuando Trump anuncia algo que le va a dar en la torre de los mercados, como ayer, que superaron el 1% y fue como de, ok, algo está pasando, ¿qué está pasando? Pues Trump. Van a bajar los índices financieros. Incluso ayer que vino mi socio, mi ayudante en marketing, 1, 2, 3, vean este comportamiento, caída, este es el Nasdaq, caída, el S&P 500, caída, y el Russell 2000, caída, o sea, ¿lo ven? Entonces, ¿qué pasa? Compras en estas caídas, porque o sea, el mercado, mi equipo, yo, el mercado, ya sabemos qué es lo que pasa con Trump y el taco trade. Entonces es muy sencillo ver este tipo de señales, comprar aquí, no sé, 100,000 pesos en 34, 35 y venderlo y acá y hacer $2, 1.5, $2 por inversión. Claro, bajo mis estrategias yo prefiero otros activos, pero es una forma muy sencilla de ver el mercado y de hacer dinero con él, obviamente. Entonces, básicamente es eso. Ahora que acá, si esto va así y así. Ujú. Ok. Estaba checando varias cosillas. A ver, acá no hay nada. No, no, no hay nada. Ok. Este, ah, ¿para qué? Listo. Ya viste que voy para allá. No sé, a ver. Mm, Tom Lee, este güey siempre hay que
From an
escucharlo. Ese
inflation
es bueno.
perspective, I mean, you're actually already starting to see a lot of it show up on the good side. It's just being overpowered by services disinflation and shelter disinflation. I mean, even if you look at the durable goods portion of something like the PCE price index, I mean, the increase that you've seen year to date, if you were to annualize that, it's one of the fastest increases you've seen since the 90s. It's not that it's egregious and it's back to, what you saw during the, 2021 to 2022 supply chain shock. But I would say that it's already starting to show up, but it's not necessarily overpowering all of the indexes and making inflation at the headline level go higher. So from that perspective,
are you as bullish as Tom?
well, for inflation, I don't have as much of a worry as I would for
the market.
growth. But for the market, yeah, I mean, I think that when you look at the sort of the fabric of the leadership of the market over the past couple of months, but that ties into the growth story that has been relatively resilient, but also the inflation story that hasn't been nearly as worrisome. It makes a lot of sense as to why we are where we are in terms of not just one sector or one industry leading, but really the market sort of taking its cue from the fact that the economy has, generally held up better, to the points that both Lauren and Tom were making. Economic data have looked relatively resilient. It's the what's coming from here clearly that nobody knows, but I think that just keeps you in a low conviction environment until then.
I mean, how much higher do you think the stock market can go from here?
I mean, if you have a lot driven by multiple expansion, then you've got quite a bit, to go, especially on the tech and the mega cap growth side. Because if you looked at, a forward PE for the Nasdaq or the Nasdaq 100, you still have, pretty considerable upside if you were kind of compared to where we've been in prior cycles and beginnings of bull markets, I would say, where you've got a lot more room to push higher. I would say the onus is more on the earnings growth side, not necessarily whether we get positive or negative, but whether that rate of change continues to keep up and you see momentum build into the third and the fourth quarters, and that comes from guidance that we'll get.
But the note we have on the screen right here from you is the middle one. Can we put that back up?
Yeah.
Let's put that back up, please, so I can see it again, because it said stretched
Put it back up.
valuations.
¿Creen?
Stretched valuations. But you're talking about multiple expansion while arguing that they're already stretched.
Yeah, but stretched valuations, I mean, they could stay that way for a while, and that's typically at these parts of the cycle, that's
Bellísimo.
typically what, powers you higher.
Recuerden que hace un momento les había dicho que estaba evaluando si vender este SBET. No lo vendí. Vean esto. O sea, estaba hace rato como por aquí. Pero lo vi, lo evalué, vi las noticias y lo que está haciendo la empresa no está mal. La relación peso-portafolio, es decir, que es el 15% del portafolio debido al capital que hay del cliente, es considerable. Aparte que fue su idea comprar esta empresa, me llamó la atención. Ahora ya entendí por qué. Se va a quedar en el portafolio. Mientras tanto, guardé liquidez para mañana operarla en intradía. Eso es todo, muchachos. Tengo que irme, tengo que ir a hablar con mis inversionistas. Ayer vi al de marketing. Tengo que seguir con mi proyecto de asesoramiento financiero, la gestión del patrimonio de algunos mexicanos, todos los que les llame la atención este mundo de la bolsa y pues quieran una jubilación pues bastante buena, pues ahí está, ¿no?
una casa en 10, 15 años o un buen futuro para tus hijos, educación privada, todo eso. Básicamente es amasar capital, hacer dinero, es todo. Simplemente es hacer dinero, con un contrato de confidencialidad, obviamente, porque pues no tengo permitido hablar con nombres, claves. Obviamente puedo mostrar los activos, eso no pasa nada. Las noticias, claro, y lo que está pasando en bolsa. Pero solo eso. Listo, voy a despedirme aquí, muchachos. Mañana ya es miércoles, 9 de julio, agosto, septiembre, octubre, noviembre, diciembre, enero, febrero, marzo, abril, mayo. Faltan 10 meses para el 20, bueno, 10 meses y tantos días para el 26 de mayo. Algunos sabrán qué pasa el 26 de mayo del 2026. Esa es una. Y dos, en enero, febrero, no me quejo, me va bien. Pero en enero, febrero quiero volver a hacer lo de los directos de juegos. A ver qué tal, ya que salga Resident Evil 9 y GTA 6 en mayo. Pero bueno, en una Play 5 Pro. Pero bueno, ya. Sigamos chambeando, sigamos mejorando la salud financiera de la salud financiera de los mexicanos, ¿vale? A ver, déjame contestar esto. Llegó un mensaje. Vamos a copiar esto. Vamos a ponerlo aquí. Listo. Y listo, ya quedó. Ok, qué loco. Va. Nos vemos mañana, muchachos, muchachones, muchachonas. Vamos a ponerle cerrar esto.